All right, everything looking good. We are live. Let me know in the chat everything is coming through loud and clear if you would be so kind. But in the meantime, let's go ahead and get this stream started. Welcome back to the channel, Crypto Trend Trader, with our midweek market update. It is 8 p.m. Eastern Standard Time on Wednesday, August 17th, 2022. And before we get started, as always, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, let's jump right in. So we have seen basically a melt up over the last essentially 6 weeks or so since we nailed the bottom. I've been able to take advantage of this move to the upside, not only in the stock markets and crypto, but pretty much, I mean, damn near everything has had a nice little bounce up, nice little pump here. But now we have reached our levels. We have hit our targets. Some assets and asset classes have overperformed. Others have underperformed. But we are definitely starting to see what appears to be the first serious signs of exhaustion in these markets. So before we get rolling here, before we really jump right in, full disclosure, I did exit my crypto positions. Obviously, there is still a possibility that we continue to the upside, but I saw enough signs in the markets. I've had enough of a move that I'm comfortable taking profits and closing my positions to wait a little further. So the other day in the group, I gave the reasoning behind wanting to take profits and potentially exiting. And I went ahead and, well, not even potentially exiting. I basically told the group I was selling. So I sold into the $25,000 Bitcoin pump. And, coincidentally or luckily, whatever you want to call it, that was basically the exact top. So we got lucky again, which is always good, obviously. And we're going to talk about that. We're going to look at the 4-hour chart. I'm going to talk about the quadruple bearish divergence that I saw in the chart and why I chose to exit at the exact top, purely by luck, of course. But one beautiful thing about this channel is people always talk about how it's impossible to pick the top, you'll never pick the bottom, etc. One thing I do love about this channel, and part of what I loved about this channel from the very start, is the accountability. I put everything in writing in advance or in video form, whatever, in advance. I have literally never deleted anything from the trade group. So I try not to even edit any of my posts. Every once in a while I do have to edit some things just because my spelling abilities are so atrocious. It's like sort of embarrassing. But even then I try to just leave it, just so it doesn't look like I'm trying to modify anything or change anything. I'm not deleting posts. I've never went through and deleted a video or anything like that. It's nice because then you have the accountability. We can look back. We can see, hey, well, I was right because of this. I was wrong because of this. And then we can use that as just another tool in the belt. So what's going on, Angel? Good to see you. Everything coming through loud and clear. Let's go ahead and jump right into these charts. So I guess while we're talking about it, I will go ahead and just jump into the into crypto Bitcoin chart, at least for now. So Bitcoin futures chart here on the daily. So we see what's taking place here. We are very clearly in a bear trend as we have a negative slope, red slope, and pink slope on the 200 exponential and 200 simple. We know once we are underneath and the slopes are red, we are officially in a bear market according to my strategy. Now, you can have whatever strategy you want, but, this one works pretty good, and I give it away for free. So, it's worth checking out. Obviously not financial advice, but it is what it is. So here we have the TJD master, and essentially, once we flip under here, we're in a bear market. Now, typically we trade with the trend for higher probability of success, but obviously on occasion, we do take some counter trend trades as well. So in this case, we went ahead and took advantage of our bottoming pattern through here. Again, we saw some nice signals for the bottom and went ahead and purchased down here. We have ridden it up from various levels on various different cryptos. Obviously, we were able to take advantage of Ethereum first and then just kind of pop into some other positions as well. But I did start to see the warning signs. Now, you guys hear me talk about it all the time, the sell by sell signal on the Jewel Thief. Here's the thing on the futures chart. I'm not saying I don't count it at all, but because the futures chart is closed over the weekend and the price action can differ so much, it just gives me, it's much less valid in my opinion. And we'll see when we go to the spot chart, we don't have anything close to this. So, take it with a grain of salt on the futures chart. because we have a spot chart as well. But, you know, it's worth noting we do have the sell by sell signal. Also, it's worth noting there's quite a gap in between the first sell and the buy. Typically, I like to see them spaced out, but you will notice that we do have the divergence. You know, this is a bearish divergence signal. We get a sell at the top of the range. We cross back to the upside. We get a buy. We get another sell at the top of the range. Oftentimes, this is accompanied by bearish divergence. And what do I mean by that? Well, we see the blue stochastic here at 76. We then see the blue stochastic here at 74. And then here we see the blue stochastic here at 73. So we have 3 lower highs on the blue stochastic here, corresponding with our sell by sell signal. And if we look at those 3 lower highs, we have essentially our first high, our second high, and our third high. So we have daily bearish divergence, triple bearish divergence on Bitcoin, on the Jewel Thief. So, you know, does it mean we have to immediately go down? No. Could we still go up to the upside? Sure. You know, but, you know, that's enough for me. I'm okay. I'm not greedy. Obviously conservative investor, trader. So it is what it is. But, you know, full disclosure, I did exit my crypto position. So not a ton here to see on the futures chart. Not a lot has changed, honestly, over the last few weeks. We did exactly what we said. We were expecting a back test of the 200 exponential and simple. We got the back test. And then obviously, like always, once we're in between the 200 simple and the 200 exponential, what do we expect to happen? We expect to range trade. And that's exactly what we did. We traded, you know, all the way up to the 200 exponential, back down to the 200 simple, all the way up to the 200 exponential, back down to the 200 simple. And I expect this to continue until it doesn't. And you're like, well, that's great. Thanks a lot. Well, you know, essentially when we're trading inside a range, I'm not going to bet on the range break. I'm going to bet on the range holding. And that's exactly what we're doing right now. So, you know, are we at the bottom of the range now and potentially going to go up from here? Definitely a possibility. But I have no interest in buying back in at these prices as of now. Now we're going to talk about a couple of things, though, that may change that a little bit. We do see the hard buy here on the weekly. We have exited the bearish control zone. We have a bunch of green histograms as well. So definitely some signs that there is some potential for continuation to the upside on our weekly. I might have said daily there, but I meant weekly. It is worth note, though, here when we got that similar signal and the hard buy signal, we saw quite a bit of follow through to new highs. Here when we got that same, you know, leave the bearish control zone, hard buy signal, we basically pushed up a tiny bit more and then we topped out. And each of those examples, when we got that hard buy signal, around when we got that hard buy signal, we had either the 821 bull cross on the weekly, or we were at least threatening it. At least here it looked like we were about to get the cross. We were converging the 8 and the 21. Here we don't see any of that at all. You know, we're not going down on the 8 right now, so that's okay. So you could say, well, the 21's converging, it's catching up to it. Sure, but how many more weeks does a 21 have to go down here to essentially like catch up? I mean, it could take a month here before we're anywhere even near close to getting back on top of it, let alone it crossing back bullish. So, you know, we do see some clear differences here. Here we started building up some momentum. We saw a few weeks of bullish histograms here. Here we see, again, multiple bullish histograms. Just don't think we should get overconfident right now, obviously. And here's another thing, too. We've been talking about it lately, but crypto has drastically underperformed in the last couple months, or last month or so. So we went into essentially a full-on risk-on environment. We see the worst, you know, essentially bankrupt companies, you know, skyrocketing again. We see like trash that is down like 90%, going up, you know, hundreds of percent. That's full-on like, you know, bull-tard speculation, which that's fine. I don't care what people bet on, you know, because that's not sustainable. And that's whatever. If they want to bet a couple of times and gamble and eventually, you know, big wins, big losses, that's fine. You can do that for sure. But that's not investing. That's not like trading. You know, if you're betting on bankrupt companies because you saw it on a post or forum or whatever, that's not sustainable. But my point being that crypto is the most speculative of any assets, because at least something like GameStop or, you know, what any of the other meme stocks, Bed Bath and Beyond, any of those, you know, just trash stocks, obviously, that are garbage bankrupt companies, they at least have like earnings and sales and some kind of like metrics we can look at. We can do some kind of fundamental analysis. We can't do that for crypto. I mean, there's a couple metrics that we could use, like, you know, how many new users are there, how many active wallets are there, you know, stuff like that. But I mean, what's the history? We don't really have, you know, legitimate like comparisons or metrics to value a company based on like how big is the network. So that being said, the most speculative asset class underperformed substantially, with the exception of a couple. Obviously, Ethereum did pretty well. We see a couple of the other ones, Matic, BNB, some of the other cryptos, at least retesting their 200 exponential and simple. The top, like I would say, 50% of stocks and even sectors retested their 200 exponential and simple. So why did crypto underperform so poorly? Why is it such trash? I mean, I don't know. We can speculate on it, but obviously, if we're in the most speculative environment we've been in since the run-up, since the full-on bubble was formed, and now we're in that same speculative like fervor again. You know, everybody's talking about new all-time highs. Everybody's talking about the Fed pivot. You know, all this stuff. I mean, maybe I could be wrong, and that's okay. If I'm wrong, I'll change my mind real quick, and you'll know because I'll tell you in real time. I'll tell you why I'm even thinking about changing my mind. And that's one thing I try to do is let you know, hey, I'm looking at this, and if this, and this happens, I'm bullish. But if this, and this happens, I'm bearish. I'm not saying we will go up from here. We will go back to 6, because there's no certainties in this game. You know, we're betting on odds, statistics, probability of success, and like, you know, what we get when we're right. But I mean, I don't go into any trade ever assuming or thinking or knowing that I'm going to be right, obviously. So that being said, we have our monthly futures chart right here. All red histograms. We have crossed below the 0 line. That's not good. Obviously, we want to bounce the 0 line and try to find some kind of support in the neutral area. That didn't happen. So now we have all red histograms. We obviously had left the bullish control zone and got the hard sell signal up here in the top of the range. And then now here we are entering into the bearish control zone on the stochastics. So not good, obviously. Now we bounced the key area and we got a decent bounce out of it. And it has lasted now, you know, essentially for a month and some change. So the real question is, you know, are we going to continue to the upside, get up here to 30K, or is this going to roll back over and retest the lows? We don't know if it's going to retest the highs or lows right now, but what we're going to do is we're going to look for a breadcrumb trail and see, hey, can we decode the markets and figure out, you know, what's the secret? So let's go over to our Bitcoin spot chart now. So here we are on the daily again, Bitcoin spot. Good to see you, Honkiness. Welcome, greetings, my friend. All right, so here we have the Bitcoin spot chart on the daily. And again, we see our first high right here, our second higher high right here, and then, of course, our third higher high right here. And then here we see a high, we see a lower high, and then we see a third lower high. So again, triple bearish divergence on the daily. Where else do we see important areas where we're able to identify and take advantage of key things? Well, let's see. We had triple bearish divergence up here at the very top. We had triple bullish divergence here at the bottom. We had not triple, but bearish divergence again here at the top. And we had this is our absolutely most perfect, beautiful, 100%, well, I shouldn't say 100%, 90% success rate rejection right here. When we roll over like this, the slope line is still blue, and then we backtest the slope line. Sometimes we get rejected before it. Sometimes we get rejected at it. A lot of times we'll push up slightly and then get rejected. This is by far the most reliable signal from this indicator. And if you don't believe me, let's look at the last time we saw that. Well, here we go. We broke down below it. We backtested it, and we got rejected. So what is this rejection right here? What is this rejection right here? Let's see how they correspond with our actual chart here and see if we can pick anything up. Well, let's see. The first one was right here. Okay, so that was the top. And then after we saw that take place, we sold off 24%. So that's definitely a tradable move, I would say. And then what about the next one? Well, that was actually right here. And again, that was the bearish divergence. A new high, but lower high on both of our indicator oscillators. There's a reason I use these metrics, because they work beautifully and they don't always agree. But when they do agree, that gives us an extremely high probability of success. And that's what it's all about, because we're not always going to be right. We just want to make sure when we are right that we absolutely crush these markets. We bend them over and we take from them everything. And we give them nothing. 51% down from that most recent signal. So we saw some massive, massive moves off of that divergence. We had here triple bearish divergence. We saw over a 50% haircut, 55%. We saw next triple bullish divergence from the lows right here. Triple bullish divergence from the lows right here, which led to all-time highs and 127% move to the upside. And then again, we saw that bearish divergence here, and that has led us down from the all-time highs down roughly 74%. So it's very reliable. It's very, very reliable. It's worth paying attention to, even if you're not going to swear by it. It's at least worth paying attention to. And again, we saw in shorter time frames bullish divergence here at the bottom as well. So now that we're seeing on a daily triple bearish divergence, I'm going to respect that. Matter of fact, I'm going to trust that. Okay, now, does it have to play out? No. But, I mean, it's worth noting. Now, here we see a sell, then it came right back up. We got to buy again, then a sell, then a buy, then a sell, then a buy. So why are we getting all these false signals right here? Well, because essentially what's happening is we're basically just oscillating, but we're floating up slightly while we do it. Well, what does that mean? What do we call it when the price action goes and just floats to the upside while the indicators and oscillators, essentially go sideways or, work up to like elevated levels? We see here, like, we went from basically this histogram on the MACD all the way down at negative 2,660. And then we moved all the way up from there to 547. So we had like almost a 3,000 point move in the MACD, in the TDMACD. Well, what does that tell us? This is trending up massively while this barely moves. I mean, it tells us that we're probably in the process of some sort of like bearish reset, which would obviously line up with a leg down and then a bullish consolidation, a channel to the upside, a bullish correction, and then again a meltdown. And then again, we see the same thing happening again. This is our bear flag happening for, I mean, it's clear as day. Now, could it be a trick? Could it fail? Does it have to go down from here? No, I mean, any of those things can happen. Anything's possible. But, I mean, this is as clear as day. If I ever saw this and didn't respect this bear flag, I would look at myself and think, wow, I cannot believe that I did not see that coming or I did not respect that. As clear as day as it is. Now, again, anything can happen. I mean, our targets, we had targets up as high as, 2650, 28,000, 32, 30. We talked about 3450 and how it would invalidate our current thesis. But as of now, what's happening? Well, let's turn on the craziest, most colorful, ridiculous chart that no one even knows what's happening of all time and see. What's happening? Well, okay, this was our targets at downside, which we hit exactly, perfectly. And that's why, obviously we were able to accumulate from these levels. And then here we are to upside. And our targets to the upside, let's see how they line up. We have obviously our previous swing high fib. We made it up to 0.5. We fell slightly short of the 618. We have our blue fib. Didn't even get back up to the 382, but we made it to 236. And then we have like the actual like macro fib. If we zoom way out here. Okay, never mind. Who cares about that fib? Doesn't matter. Anyway, my point being that essentially we have done what we needed to do. The minimum we needed to do for this leg down here, for what I was calling the 3, and then the move back up for the 4 was, if we take our pivot right here in blue to the low right here, the minimum we needed to do was come up to basically the 236. And then from the recent swing right here, the internal swing of that 2, that was the 32,000 level. The one before that in blue is that 48,000 level. And then obviously we have the macro from the all-time high is the yellow one right here. So the minimum we need to do for a fib is a 236 retracement. And then typically we'll expect to do a 382 as well. So did we fulfill that? Well, we fulfilled it on the white fib and we made it to the 0.5. So we know that it's legitimate, that we have retraced, enough of this move right here that is valid. And that could be it. We could be done from here. Doesn't have to go lower. What do we do? How do we determine if it's going to go lower or where our invalidation or validation levels are going to be? Well, I mean, I would look at essentially, how do we want to do this? Let's go to our shorter time frame and take a look. Again, I don't like looking at the shorter time frames on stream, but because things can change so fast. But we're going to go ahead and take a look at it anyway. So essentially what we had taking place, man, tempted to just. All right, so what we had taking place right here is we were essentially looking at this channel. Obviously, what we've been expecting is that bear flag to play out. So let's look at how it is. Let's slap it on here real quick. And I'm going to show you what I have on my personal chart right here and what I've been watching on the shorter time frames and just how beautifully this has been playing out. Okay, so what we did was we basically took from the swing low right here. And then we just essentially went across here. We kind of like, ignore this little tip right here. Not because we don't like it, but just because it works perfect if we kind of just like skip that little thing or call that an outlier or a failed breakdown or whatever you want to do. And then as far as the upside goes, we obviously have our first peak like right here. So we'll look at how that is and then see how it lines up. and we see from that first peak with this channel tool that we basically have a touch right here, a touch right here, and a touch right here. So that looks good to me. We see some clear interactions with the heart line, with obviously these pushes up here, and then obviously some support, all that good stuff. We have a lot of confluence down here at the bottom of the range. So lots going on here, and fairly reliable so far. So then from that point on, the next thing we did was started using our triangle tool and looking at, a little shorter of a time frame here. So I will pull up that triangle pattern, and then if we take from our bottom right here, and again, you could use your closes, you could use your wicks. It would be slightly different either way. We're just going to use the wicks just to keep it simple, and we're just going to use our triangle tool to draw in a, what amounts to an ascending triangle basically right here. So that was our ascending triangle now, and what we look at is here's our low, and then we come down. Now it's locked in, and then we have 2 points on the top, 2 points on the bottom, and then essentially what happened, well, we were kind of going sideways here. We were floating up, we hit the top of the triangle, try to get up to the top of the triangle, try to get up to the top of the triangle, push all the way up to the top of the triangle here. That's where I ended up taking profits. That's where I sold at. So, I mean, within obviously a couple pennies of the top, does it always work out like that? No, of course not. Sometimes we're going to be wrong. Sometimes we're going to sell too soon. Sometimes we're not going to sell, etc. So then on top of that, if we continue looking at what's going on here and we look for why was this looking like essentially, it might be time to go ahead and get out. If we look at even shorter time frame here, it's even more clear. But basically from our actual triangle now, we're going to go ahead and look at what's taking place right here. So inside of the actual triangle itself, again, I took this bottom of that wick right there, and then I basically just drew in some support to the next point right here, which is our low right there. And then that essentially gave us what amounted to, now in hindsight now, when you guys look at this and you see this, you're like, well, yeah, obviously, we broke down from that pattern. Well, in real time, obviously for the group, in real time, you get to see all these charts, whatever, as we're going through. And essentially what happened? Well, we were just in an ascending wedge right here, a tightening range as we move to the upside. So here we're cruising to the upside, cruising to the upside. Here we break down right here. And then what do we expect after that? We expect a back test. So we have broken down from this pattern right here. And then essentially we get this back test in this giant green candle that pushes up to the top and then essentially tests the top of the range. Well, you guys know me. I'm buying support and I'm selling resistance all day, every day. All day, every day. Buy support, sell resistance. Trade the range until it fails. So I'm trading the range. So I'm buying support on the triangle. I'm selling resistance on the triangle. I'm buying support. Obviously I was already in position, so I didn't really have to. But buying support on our ascending wedge, selling resistance on our ascending wedge. So when we came up here to this, and then we're gonna go to we're gonna look at our peak right here, the first or actually, yeah, this peak right here. I'm sorry. We're going to look at this peak right here, close on the 4 hour. This peak right here, close on the 4 hour, higher. This peak right here, close on the 4 hour, higher. And then this was our next push up right here. And it was essentially like the same high. So I said in advance, hey, if we close the same high right here or higher, that's going to be our fourth drive of bearish divergence. We broke down from the range, and then we would be pushing up here to the top of the range, top of the triangle, as well as the top of the ascending wedge. So that's why I took profits. I took profits at it was like 25,100 or something. Obviously at the tippity top. And, I'm going to tell you the truth, how I really know. I talk about all this technical analysis and everything. But the truth is, I shook the magic 8 ball and I was like, hey, should we be long here or short? And the magic 8 ball was like, well, I actually can't answer that question. So I can't remember what it actually says in them. But regardless, I shook the magic 8 ball and it was like, GTFO. And I was like, well, I trust you, 8 ball, because you haven't let me down yet. So that being said, between the technical analysis and the magic 8 ball, that was it. That was a wrap. So now, look, it's not always going to work out like this. We're not always going to get a decent rejection and then just a meltdown like that. We got lucky, obviously, which is what it's all about. It's all about just getting lucky. Right? Isn't that? I think that's what it's about. Or it could be consistent technical analysis with a rules-based trading system. I think it's that one, and the luck too. The luck too is good. So from then, obviously, full-on bearish engulfing candle. You don't even have an opportunity to get out at that point in time. And then, of course, I look like a genius because I just saved myself whatever. It was like 5%. It's like nothing. But after that, what happens? We melt down to the bottom of the triangle. We discussed this once again in the group. We were talking about there's a bunch of fibs and stuff. I deleted all that just to clean this up. But, you know, there's fib levels. Basically, we're getting rejected at the macro 236. So I guess that's, you know, I could draw one fib on here. I guess that kind of makes sense. I guess I'll draw one fib. So essentially from our peak right here to our trough to the bottom. And then again, what do we see? I mean, on the way down, we see perfect back test, support, support, you know, back test to support, trying to oscillate around here, rejection, couldn't get back above the 618 here, meltdown. We don't have this fib yet though, because we don't know where the low is. But now in hindsight, when we look at it, we go, oh, okay, so this was planned. This was clearly orchestrated by bots, algorithms, and, you know, big blubbery mammals, okay? The whales. So they knew where this was going, obviously. I mean, this wasn't just luck, right? It wasn't just a luck that we got down to this level and, you know, in hindsight, when we look back, it looks perfect. No, of course not. It was all planned. So here we see, essentially, that was our first rejection. That was our second rejection and the beginning of some divergence levels. And then here, you know, that was our short-term divergence we saw. And then again, as soon as we lose the 236, goodbye. So our next target to the downside, obviously, was the 200 exponential and simple on the 4-hour. And then, of course, we still have the bottom of the channel as well. So what's going to happen from here? I mean, we're going to trade the range, right? Because that's what we do. We see, obviously, the stochastics are in the bearish control zone. The last time they were in the bearish control zone, we were on the 200 exponential. We got to move to a new high after that. The time before that, we were at the bottom of the channel, and we went up to a new high after that. The time before that, we were at the bottom of the channel, went up to a new high after that. So, you know, and then obviously here, bottom of the channel, and then new high. So what is likely to happen from here? I would say likely, you know, we're basically going to find support at 200 exponential and simple, push all the way up here, and put in some form of a new high. Now, it doesn't have to happen. You know, this works. Trading the range works until it doesn't. So what are we talking about to get to a new high? Probably like 9% or so. Maybe we get all the way to the top of the channel. Maybe we hit some of our other important fib levels, the 0.5 or 618 or whatever, you know, 18% to the top of the range. So we could take because we're at the 200 exponential, the 200 simple, and our support of the channel right here, we can essentially take a position from this level with a tight stop loss. Because we know, okay, what's going to look really bad? What would happen on this chart that would look really bad to me? Where I was like, whoa, something's not right here. Well, if each time we have been going up here, we have been putting in a low, then a you know, a high here or high here, whatever. It's all part of the same move. We don't know that until in hindsight, obviously. But we have a low, then a high, then a higher low, then a higher high, then a, you know, higher low technically. We come down here, we threaten it. Everybody gets scared, but we find support. New high, higher low, higher high. You know, higher low right here, higher high again. So what is going to make me bearish on this chart? A new lower low. So we cannot come down below 22,430 without putting in a new lower low. So now it's important though. I don't want a wick to come down here and take me out like these chumps, like these suckers did right here. Okay, I'm not doing that. I'm not going to sell the bottom like some newbie. No, I don't do that. So we're waiting for closes on significant time frames. So that being said, you know, we don't want to run a hard stop necessarily unless, you know, obviously if you have to, if you're at a job or whatever, you know, that's fine. You can do whatever you want. I don't like to play that game because crypto is notorious for wicking you out of your position at the worst opportune moment. So we have 22,459 is basically our line in the sand right here. So we're going to take this down here and say, okay, what would our stop loss be then? It would be 3.84% if we put in a new low. And what does it look like if we put in a new low? Well, we have a new high right here, so that's good. If we come down and put in a lower low, it's not technically the beginning of the downtrend until we come up and put in a lower high as well. So even if we do break down from here and put in a new low, we don't know how low it's going to go, but we want to at least be, you know, in a quick little scalp position one way or the other, because it's likely going to push back up and put in a lower high. So we don't want to get greedy on it, but there's obviously going to be some potential there to, you know, have a nice little trade. So obviously, if we've been respecting the top of this ascending wedge, that would be a key area, obviously, for resistance. So that would give us 8.2%. On this time frame, we're still above the 200 exponential and simple. So we're still bullish on the 4-hour. Obviously, the daily is still horrendous and bearish on that, obviously. So essentially, we're looking to enter a position somewhere around here with a 2-to-1 risk-reward ratio. It's important to know, though, even though we're taking this position based on the trend on the 4-hour, it's very, very important to know, hey, the daily is still very, very bearish. So is it counter trend? Is it with the trend? Do we take a trade setup that's only 2-to-1 if we're kind of counter trend but kind of with the trend? No, not necessarily. So that's not a great trade setup right there, but it's respectable nonetheless. Ideally, what we would like to do is we would like to get a slightly better entry. The best entry would be at the bottom of the channel right here and a push below the 200 simple, because everybody gets scared because we lost the 200 simple, and then we jump in, and then that tightens up our stop loss to a 2.3% stop loss with an almost 10% upside, 9.96, and that's a 4.3 to 1 risk reward ratio. Much, much more favorable. Now, here's the thing, though. What if we don't get this entry and then it runs 8 or 10% and we missed out? Well, we could take a smaller position at both entries. So we could take one off the 200 exponential or simple right here, whatever. But regardless, though, this trade's either going to work out spectacularly or it's going to fail quickly. So it's not that big of a deal either way. But ideally, obviously, we do want to get a slightly better entry. But the real target to the upside is actually the top of the channel right here. That's what we're really looking to do. And we touched it quite a few times. 2 right here, a 3rd right here. But then we've been falling short lately of it. But obviously, if we're trading the range, the bottom of the channel is the bottom of the range, and the top of the channel is the top of the range. The more time that goes by, because it's ascending, the higher it's going to be. So is it possible we get all the way up here to the 382, and we do get that back test of 30K and a 28% move to the upside? It's definitely possible, but at this point in time, it's not necessarily my base case. So we're going to keep it pretty modest. We'll put up here about a 19%. And again, with a 2.3% stop loss, obviously super, super tight, 8% risk reward ratio. And again, the benefit of taking these positions off of key swing levels or key pivot points like the 200 exponential and simple moving average, the bottom of the channel we've been trading inside of for 7 weeks so far. The benefit of that is we find out right away if we're wrong. We say, okay, if we break down from here, we're immediately wrong, and we get out and we lose barely anything. If we take a trade, from up here at like 24K, we have to come all the way down here. We lose like 5, 6, 8. We might not even be able to take a trade because the risk reward's not there. So that's what I'm thinking right now. Obviously, does it have to play out? Is this going to be a great buying opportunity? Are we just going to break down from here, capitulate, and just melt down? Well, we don't know, but let's just say hypothetically that this is going to be it. Let's just say the top is in and it's done and it's over and we're going down from here. And, Michael Saylor, is obviously a loser moron. We don't know that's true. Well, I mean, we know that he's a loser moron. We don't know that we're going to break down from here, though. And look, the only reason I'm picking on Michael Saylor right now is he's like back out doing interviews again, talking about how like Bitcoin was this amazing investment. And then he's using like skewed metrics. Like he's basically, like a lying scumbag. Like he might as well be part of the government because what is he doing? He's coming on and talking about his Bitcoin strategy and how great the Bitcoin strategy is. He's talking about how much MicroStrategy's price is up. He's talking about how much Bitcoin is up since their initial entry. He's like, well, from when we started our Bitcoin strategy at $10,000, Bitcoin is up currently over 100%. So there's no other assets that are up 100% since then. So we're geniuses. Okay, genius. Why is your average cost basis for Bitcoin 30K then, you moron? I don't talk about like, oh, the first time I ever bought Apple stock, it was $3 in, 2000. I mean, I just made those numbers up, but I don't say, so obviously Apple was the best investment ever. That's kind of a bad example because it actually is a really good investment. But I don't say that. I'm not like, oh, so since that point, with the splits and everything, I'm up hundreds of thousands of percentages and I'm a genius. But I bought one Apple share then, and then I bought 1,000 a week ago. Like, get out of here. Here's the problem. I say nobody believes you when you lie like that, but the problem is everybody believes you because people are just stupid. So that being said, Michael Failure, let's move on from him. So I heard he is going door to door now. Part of the reason he stepped down as CEO is he has teamed up with an organization and is going door to door, basically just begging people not to sell their Bitcoin. So what is the name of that organization again? I can't even remember. They go door to door. They knock on it and talk about religion. What is that called? Oh, that's right. The Jehovah's Witnesses. He has teamed up with the Jehovah's Witnesses, and they're going door to door now. So, it's cool. I'm glad for him. Good for him. Respectable. It's respectable. And I am joking. I have no problem with Jehovah's Witnesses, obviously. I mean, as long as they're knocking on someone else's door. So that being said, what's going to happen if, it's done? The move's over. We're going to break down from this channel. We have our measure move to the downside. What's going to happen if we break to the upside? Well, first we got to get to the top of the channel, and then we can start talking about potential breaks to the upside, etc. But our measure move would be essentially just a pushback down to about 19K. Now, if we break down from this to 19K, that's just our initial target. That is going to look pretty clearly. Obviously, we'll have broken down from this range, but it's going to look pretty clearly that, hey, actually, that's it. And, we have a leg down. We have a consolidation, bullish channel. And then we have another leg down. And then we have a consolidation, bullish channel. And then if we break down from that channel, it's going to be pretty clear that we're ready for another leg down. So, again, it doesn't have to happen, but it's worth paying attention to. So we have a bull case. We have a bear case. We'll see what happens from there. Obviously, in the meantime, I'm looking to just scalp this range. But, I mean, we're not talking about positions and hodling and all that stuff. I'm talking about literally like scalping like 5 and 10%, for like, I don't even know what you want to call it, entertainment money or play money or whatever, I mean, I'm not looking to get rich off this little move right here. The move is done. I mean, I shouldn't say it's done. The majority of the move is probably done. So that being said, we have a bull case scenario. We have a bear case scenario. We have some clear targets. We're looking at, what's going on here. We're obviously at the bottom of the range, the channel. We're at the 200 exponential and simple on the 4 hour. We're in, we could go lower, obviously, on the stochastics, but we're very low on the stochastics. So it's worth paying attention to and looking at this potential scalp trade setup. Obviously, it's not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. This trade setup is obviously for me and only me. And you guys know, obviously, that if you listen to anything I say on this channel as anything more than legitimate entertainment, you will be living in a van down by the river. But you know that already. Obviously, this is just for fun, I mean, I literally shake a magic 8-ball and draw cards from my tarot deck to decide what trades I should take. And occasionally I look up at like, the sun and the stars, and I check with like the tides and the moon cycle. I mean, the lunar cycle. Obviously, I know what I'm talking about. So we'll see. We'll see what happens. We're putting in threat the 821 on the daily right here. So closing below that is not good. It's not crazy to think that we reclaim it though. We did essentially right here, we reclaimed it. Here we threatened it and then went to new highs. So, there's definitely some cracks showing up here. There's definitely a couple things to pay attention to. It's a little counterintuitive to take a buy at this point in time. But again, with proper risk reward and, position sizing, I think it's, there's nothing wrong with it. When opportunity presents itself, it's there. But again, we're looking for just like a quick move, a couple days long, etc. Not looking to hodl from this area. So then on the weekly chart, again, what do we see happening? We broke down, we lost at 200 simple. Obviously, our base case scenario is a back test of the 200 simple and 200 exponential. Now, are we going to get there? Are we going to get to 27K? Again, we don't know, but obviously that's around that same target to the upside we just discussed. And then here on the weekly, again, we see the hard buy signal coming out of the bearish control zone. We know the last couple times, here we got nice follow through. Here we got a, pretty clear rejection or, rolled over. So again, we expect that to potentially happen, but it's not crazy to think we're still going to come up here to like 26, 28K. All green histograms on the weekly. It looks okay for potential upside still. It's not crazy to think that. Now, if we look at the monthly right here, again, what do we get? We got the move up we expected. We got complete underperformance though. A regular back test would have been a push all the way back up to like 32K. We have not gotten that yet. It doesn't mean we're not going to get it. Also, stochastics, very, very close to entering into the bearish control zone. So essentially the bounce that we got, that little pathetic dead cat bounce that we got, that's the only thing that stopped us from being in the bearish control zone. Last 2 times we were in the bearish control zone though, it's worth noting that that was basically our, bear market bottom. We were basically putting in a bottom. Now, from when that turned green, we're always measuring stuff out and planning stuff and trying to use any data points we have to gain an advantage in this market. From when that data point turned green, and we entered the bearish control zone, we see 1, 2, 3, 4, 5, 6, 7, 8 months. We see 8 months before we exited the bearish control zone and get the hard buy signal. So we have 8 to 10 months, depending where you're going by, in that bear market, basically oscillating in a small range, and while everybody just gives up, capitulates. Because what's happening during that time? People are paying ridiculous funding rates for any leverage they're taking out. I mean, it's just, time capitulation, as we always talk about. And then here again, where we enter into the bearish control zone, how many months go by? 1, 2, 3, 4, 5, 6, 7, and then finally we exit. And that was a nice move leading into that, obviously. So, could we get a nice move within that 7, 8, 9 months? Sure, definitely could. So it's worth paying attention to what could potentially happen right here. I don't think it's crazy to think that we could get, 5 to 9 months of just kind of sideways action and then actually end up somewhere around like 32K. But you guys know, if we start going above like 32 to 34K, that's going to actually basically put an end to my base case, which is that we're in the middle of a 5 waves down, which would be, this is wave 1, 2 is a correction of the 1, 3 is down, 4 is back up, and then we got our 5th wave down. Where does the 5th wave down take us to? We've talked about this a million times, obviously, but since I've deleted everything off the chart, and we have this beautiful, clean, virgin chart, we might as well pay attention and utilize it while we're here. So here we have the closes from 2017, 2018, and that lines up also with our little wick right here from that 2019 like 14K one coin pump, that fake run that got us out of the bear market, which is great. So obviously that's a pretty clear resistance. And then here when we got to that same level again, we, that was an exact area we stopped at, and then we closed above it, just off to the races after that. So that's going to give us 13,844 target. Now we don't have to get there, but it's worth noting that, that is a potential strong area of support that would actually make a ton of sense if we got down to it. And then what if we just slap old Fibonacci on the chart? We just drop that fib zone. We just kind of see, how does that line up? Does that give us any level of confluence? Is there anything here worth paying attention to? Well, we see the 0.5, the 50% retracement from the cycle low to the cycle high puts us in right around that level. So the 50% retracement is about like 14,600. We'll call it 14.5. And the yellow area that closed on the monthly, that was 13.8. So between 13.8 and 14.5, seems like a respectable, highly probable area if we do in fact get one more leg down. So that's what I'm looking for. We'll see what happens. Obviously we don't know, we're just looking at breadcrumbs, looking for looking for clues. So, and then if we just go back down to our daily time frame real quick and just kind of see how does this line up on the daily. Well, this is that 236 right here. And what is a back test of the 236? Well, we peak out, we break all the way down to the 382. We finally reclaim the 382 and then potentially push up to the green 236. And that would also correspond with around the area, the break from the channel, the bullish break. It would also correspond with that 236. And then, of course, also our 200 exponential and simple moving averages around there. So, do we get to 33,500? There's a lot of confluence at this level, but that would be the area where I would be looking to exit again. And then obviously if we go any higher than that, that's where we invalidate my base case. And then it's time for me to say, okay, we've been right this whole entire time, perfectly, buying bottoms and selling tops. Absolutely disgustingly clairvoyant or lucky, whatever you want to call it. But the fact of the matter is, if we get up to the 382, it's still viable. If we get up to the macro 236 or the 236 in green, that's still viable. But if we go any higher than the 236 or arguably the 0.5 in orange, that same little confluence level, if we go any higher than that on a longer time frame, we're now invalidating our 5-wave Elliott wave to the downside. And now I have seen this quite a bit. Look, I use Elliott wave as another tool in my belt, but I don't use it like some science where every single move that happens, I have to create some different Elliott wave pattern and it to be. Look, sometimes it's just a clusterfuck of price action and there's no Elliott wave to be put on it, in my opinion. I use it as a tool when it's clear as day. And why do I do that? Because if I could see it clear as day, a lot of other people probably seeing it clear as day, especially, the cult of Elliott wave. But If I barely see it like this cult does, like these Elliott Wave cult members who every little move inside of a move, they're going down to like 1 hours and 4 hours and dailies and weeklies, like every time frame, and everything has to be an exact fib. And look, it's just not realistic because no one else is going to see it because no one else is doing that. Like you're part of the cult. So you're taking it to the next level of everybody else. That's not useful to me. I need to be doing what everybody else is doing. So that being said, if we get back above this level right here, that invalidates, my base case. So it's worth paying attention to that as a possibility. So, realistically, when is it going to get there? How long does it take? We don't know. I mean, we can, let's just slap it somewhere around like here and say, okay, look, that's our maximum area that we can go to. If we go higher than that, it's time to reevaluate. And by reevaluate, I mean we will already have evaluated in advance. And we will have clear targets, invalidation levels, all that stuff planned out. Because that's what we always do. We always plan out ahead and then plan out behind. Now let's look at this chart right here now and see, does this look realistic like what we've been seeing? Well, we see a leg one down right here, then leg two, which is a correction of the one. And on that leg down, and look, the only reason I'm going so deep on Bitcoin today is, we're at key levels. And what happens in Bitcoin is going to reflect in obviously what happens in crypto. So we need to be prepared in advance and have this fresh in our minds so we know what to look out for. And I mean, I'm sure you guys all love it when I look at Bitcoin. So, plus I don't have to explain myself to you. So here we have our one down, and then where's our two go? 50% retracement of the one. So here's a leg down, we give back 50% of it, and then we head back to the downside. So, okay, so we have 50% for our leg one, and then the distance from our one down, from the 0 down to the 1 was basically 70K all the way down to like 33K. So we saw like a 37K one, pretty big one. And then the 2 was obviously, the retracement, the 50% retracement. And then from the top of the 2, we're at 48K. And then we came down here to like, 17. So from 48 to 17, we see 30K to the downside. So we know this one was 70 to 33. So that is more obviously than 30. So what that means is wherever this tops out right here, wherever this fourth wave finishes, we know that the most the 5 can go down is equal to the 1 because we know the 3 is often the longest, but never the shortest. So if the 1's longer than the 3, the 5 cannot be longer than the 3. But I mean, at that point, who even cares? Because we'll already have been right and made a ton of money. We'll just fall slightly short. So we know that if this is going to be valid, if my 5 waves to the downside structure based on, the expanded flat, all that I've been over a gazillion times and explained a gazillion times, if that's all correct, which so far it's been perfect, we know that this can't go down 30K, but we don't know where this is going to top out at. So that's what we need to pay attention to next, knowing obviously they can't go down more than 30K. Now, here's the thing. We're at, right now, 23K. So we can't go negative. So obviously we can't go down 30K. But if we go up to 3250 or whatever, you're like, well, we're not going to go to 2,500. I mean, we might, but again, there's not really a case where the 5 is going to be longer than the 3. It's impossible. I mean, almost impossible. So basically we don't have to worry about invalidating the 5-wave structure. So that's great. That's just one less thing that we have to take into account or worry about. So now let's look at, essentially like if we were doing this as measure moves, how would that look essentially, something like that. If we were using like basically one of our other tools, to kind of project the move and what we would expect to happen. Well, here we see, that's our leg down. So we're just going to draw that in with the red line. And then we're just going to take that and see how does that extrapolate towards the downside. Well, here, that was where we peaked out. And that was roughly where we extrapolated to the downside. So from that point, we'll just do the same thing again. And see, potentially, what if we then extrapolate this move to the downside, and then we can get a rough idea of the range. Oh, my bad. I didn't mean to get rid of the other one. We get a rough idea of the range and the, kind of like slope angle. Now, you guys know timing is obviously the least reliable portion of trading. It's very, very difficult, which is why most people, lose their ass on options. Because you're not just betting on the price action and where it's going to go. You're betting on timing also. So if you're already not doing great trading or you're just mediocre or whatever, you're like, why not make it a little harder and trade options? Okay, cool, sure. Have fun losing all your money and not being in the game anymore. You know, it's gambling though. You know, I like to play roulette and stuff like that too. There's nothing wrong with options, but just be prepared. So if we were to just break down from now, what would happen? Well, if we just extrapolated our two moves right here, you know, one obviously has slightly less velocity and slightly less range. The other's a little more aggressive, obviously. Where do those take us down to? You know, I mean, roughly somewhere around our target, which is that 0.5 and the macro. So that would give us essentially like that 13, 14K. What if we did the overshoot and we got like the full measure move to the downside? Where would that take us to? Roughly the 618, 10,400. Is it crazy to think that we retrace all the way back down to the golden retrace zone and then we start into a new bull market? I don't think so. I don't think so. So we have some pretty legitimate targets here. Now, what happens if we continue to the upside and we max out this move to the upside? You know, and let's say we go all the way back up here and then we take the move down from there. Where does that give us our targets to? You know, somewhere around, again, our exact range. So it's not crazy to think we just break down now and go to 10K. It's not crazy to think that we creep all the way up to 30K and then we break down to our exact target. Anything in between there could happen. We could go up a little more and then break down. We could go straight down from here and go way deeper or way less. We don't know exactly what's going to happen, but we have a pretty clear, you know, area. So now what other tools could we use to get an idea as to, you know, what's potentially going to happen right here? So for me, what I would want to do is say, okay, let's start connecting, you know, let's start touching tips and see what happens. Let's touch tips. So if we go from the top of the 0 and then the top of the 2, and then we say, okay, where's our 4 going to top out at and when? Well, you know, is it going to be, I mean, it might not be textbook, obviously, but here we could see that, you know, realistically, where does that put us at? Well, maybe we slightly underperform. We make it up to the 382. We backtest the 200 exponential and simple, and then we get rejected there. Maybe we get our push all the way up here. You know, we don't know, but that gives us at least some kind of resistance based on this. And I think a lot of people probably would be like, I'll connect this point, and then I'll look for, you know, what happens next. And it could be anywhere, you know, in here. I mean, we could literally, I mean, this would be the ideal situation, is for me to just always be right about everything. That's ideal. Okay. Now, does that happen? No, of course not. I'm not always right about everything. Of course not. That's ridiculous. But let's just say all of a sudden, you know, Michael Saylor just got like another $1 billion loan and just comes in and just starts like market buying crypto, and we just go parabolic from here instantly. Okay, where would that take us? Well, look. Oh, look. We could actually hit the resistance. We could hit our resistance in red. We could hit our macro fib. We could also, you know, obviously get to our target with the 0.5. I mean, that would be perfect. Now, is that going to happen? Probably not. Is it possible, though? And would you be like, oh, my God, how did you know? And like, you'd be like, you're just best friends with Michael Saylor, and you're not telling us. To which I would be like, no, I'm very selective with my friends, and I would never, ever be friends with, threw up in my mouth a little bit just thinking about being friends with Michael Saylor. Ugh, disgusting. Very, very cringe. So now what if we connect our lows right here, okay? Where does that give us? And then, you know, potentially, you know, where would that give us a target to the downside if we were going to creep on down and hit those lows at some point in time? Well, we could just extrapolate this out into the future again. Now you're like, well, do we go by, you know, if we go by closes, do we get a different picture? If we switch time frames, we're going to get a different picture. So, you know, it's not going to be perfect every time, but we could at least take into account. So again, let's just say, you know, if we're going by just the wicks right here, that's going to give us roughly that. If we're going to go by like actual closes, it's going to give us a slightly different picture. The real goal, though, with this is you're really just moving. So you see how when I move that, watch right here what happens. Now it's at closes and the wick slightly below it. Let me make that a little bigger. This is our close right here, and our wick is slightly lower. When I move this from our close to our wick right here, slightly lower, it actually just lines up with the wick. So either way, we essentially get the same picture by changing the angle of the one. But then we can look at how does this extrapolate and change, you know, the final line. And it really doesn't move it that much. So even if we're not right here, we're going to be pretty freaking close. So again, now, the same way we said, let's just say we're just a genius and this just skyrockets to the upside instantly and, you know, hits 33K and we're just a genius, which is obviously possible. Or let's say the opposite, the bear case, we just straight melt down from here. Well, where would be the bottom of the channel? It would be literally at our target of like, you know, 14K or whatever. So we have a pretty clear, potential like maximum bullish target, maximum bearish target, and then a bunch of different like hypothetical situations in between. And we don't know, what's going to play out. We have no idea what's going to play out right now, but we can take our best guess. So now here was from the top right here all the way to the bottom, and we were looking at the orange fib. I'm going to go ahead and delete this one now, and then we're going to look at the same way we did the fib from the top right here to the bottom right here, and we had a 50% retracement. Now we want to look at, and you can have all these on your chart at the same time, but the whole reason my chart's like unreadable and I just deleted everything was just, it was too insane. So here we basically made it to the 382. We fell slightly short of the 382. So we underperformed so far. It's not crazy to think we get back up to the 0.5, which again is going to give us like 29K target. So if we do the exact same thing as here and we get a 50% pushback to the upside, that puts us at, basically a back test of 29K, and then we melt down. So what happens if that was, let's say, like a little more realistic? We don't just immediately get our base case scenario or our bull case scenario and we have to be like patient. Well, now look, now we have basically just this coming up here and then tagging the 0.5. And again, it lines up almost perfectly with that resistance right there. So we have a pretty clear, definable region. And like, basically, it's like we always say, the choose your own adventures. We're at that place where it's like, okay, depending on what we decide right now, whether it's bullish or bearish, it depends what page we have to flip to in our choose your own adventure and how the story continues. And of course the narrative is going to come out afterwards and everybody's going to talk about hindsight TA and how, of course, it was bullish. It was so obvious because of institutional adoption and Bitcoin's going to be the world reserve currency and some crazy country somewhere that's going to be bankrupt probably soon as like put, some Bitcoin on their balance sheet, like whatever, who cares? And then what about the other one where if we just break down, it starts going zero. It's like, oh, well, actually, like, Bitcoin's garbage and it's outdated and, it's terrible. And there's going to be some kind of narrative either way, but we don't really care about that. What we care about is how this can potentially line up and how we can decide which way it's going to go. So that's what I have going on right now. That's basically, my bull case, my bear case, and we'll see how it plays out. We obviously do not know right now, but to me, this looks like 5 waves down. It looks like the bullish consolidation, the exact one that we talked about in advance, that we participated in, and basically nailed. So we'll see what happens from there. Right now, we're just backtesting that daily resistance, the breakdown. We'll see what happens. Do we rally to the upside? Do we break down? Who knows? But you know what I'm thinking now. You know what I got. You got all the privateness from the group right here on the internet for everyone to see for absolutely free. So congratulations. But obviously, in real time for the group is much more useful. So next we have Ethereum. So we'll look at Ethereum. Obviously, Ethereum outperformed substantially and almost backtested 200 exponential and simple. So we were able to capitalize on that very, very nicely, obviously. And then here we see basically we put in a peak on the stochastic right here, the blue one at 88, 87, whatever. And then we put in a lower peak right here at 86. We see the knife is through the roof right here. We see the knife is much lower right here. And then what do we see on Ethereum price action wise? We see, basically our peak through here, one or the other, whichever one you're using. And then our peak right here. And we see bearish divergence taking place right here. Now we don't see it as clearly as we do on Bitcoin. Just because, Ethereum has been, it's kind of doing its own thing right now. Obviously, there's a lot of like fundamental reasons with the merger and everything and, all that good stuff, all the like fundamental stuff that everybody's like super excited about, no doubt. The psychology behind why Ethereum has been outperforming so well is because no other crypto has like a bull case right now because they're all like, when I say all, I mean like 99% of them are useless trash. So if like all of them are useless trash and there's like nothing that makes you want to like suddenly get bullish on that useless trash, what happens? Well, people get behind some kind of narrative. So in this case, it's the narrative of Ethereum, and the merge and this and that and the other. Or it might be like Shiba Inu now suddenly is like rallying massively because, because people like dogs. Or whatever. I don't know what the actual reason is because obviously I don't listen to any of the morons talking about Shiba Inu. And, whatever. There's plenty of other ones we can point our finger at. It doesn't just have to be a dog one. I'm sure there's a cat crypto that's also total trash. Whatever. So bearish divergence. This thing has performed about the equivalence of the stock market. Backtesting the 200 exponential and simple. Is it getting ready to roll over? We lost the 8. We're still above the 21. We have not lost the 21 this whole way up. So if we lose the 21, that's like our line in the sand. There's clear support there at about 17,065. I'm sorry, 1765. 17,000. You wish. Trash bag Ethereum losers. Ha! Never. Unsubscribe because you're mean to Ethereum. You dickhead. So anyway, that's, is this move done? Are we going to go slightly higher? Can we put some fibs on here? Can we do the same thing we did with big? Sure, we can do all that. I'm not going to though. But I'm not going to. So that's what I'm looking at. Ethereum obviously been doing well. We could look at the Bitcoin to Ethereum ratio. Again, but I'm not going to. It is what it is. This lines up. This Ethereum event lines up roughly with the Fed meeting. We obviously know, we're going to have a couple more data points before then. Nothing has changed with the Fed, in my opinion. I'm still 50-50 if we get a 75 or a 50. I think Powell's going to do a 75 just to be like, look, bitch, not going to happen. Because everybody's talking about a pivot. And the way the markets responded after they did the 75 last time, they were like super bullish. So the last thing I think Powell wants to do right now, he's trying to destroy wealth. He is literally trying to destroy wealth by demand destruction, the wealth effect destruction. And the last time he tried to do that, he hiked rates by 75, which is like a monumental rate hike, and the market exploded to the upside afterwards. So you think he's going to come in and do 50 now? No, the market would be at all-time highs like a week later, and he'll just be pissed. No, not going to happen. They're fighting inflation right now. It's the top thing. It's the only thing that they care about. All right, so Bitcoin dominance chart broke down from support. We're, now we have a low, and then we have a lower low. So at some point in time, we're going to push back up here. And if we put in a lower high right here, we're back in a downtrend. At which point in time, it's game on for the altcoins. And does that correspond with us another leg to the upside? Does it correspond with, one random altcoin just being like the few? Let's just say XRP like beats the SEC, and then a bunch of countries come out and they're like, XRP is amazing. We're going to adopt XRP as like the future currency, bros. And like everybody's just going to like get so many XR penises straight in their pockets. Oh, it's going to be amazing, guys. Sure, maybe it happens. And that will, and only XRP rallies and everything else just crashes to zero. XRP goes to $100. All the XRP clan, rejoices. It's possible. It's definitely, or maybe it's SHIB. Maybe Shiba Inu explodes, like aliens come down from space and like they open up their little spacecraft doors and like little Shiba Inu like looking aliens walk out on two legs and they're like, oh, thank you for embracing our SHIB coins. For that, you get everything. It's possible. It's definitely possible. It is much less possible, but it could happen. Do you want to bet on that though? I don't know. Total market cap on the weekly. Crypto bouncing 200 simple, back testing 200 exponential, reclaiming that area. Now we're back testing after the reclaim. We're above the 8. We're below the 21. The next target to the upside has and will still be the 21 at 1.25 trillion. Do I think it's going to get there? Am I expecting it to get there? I think it probably does just because of like the irrational exuberance in the market. But again, the same way we've been talking about, like, the clock is ticking. It's the same thing. We have limited amount of time before that next Fed meeting. And I'm going to tell you right now, the way people got excited over, the last, little hourglass with the sand in it and everything, I just don't think the market is going to do what people think it's going to do again. Because the last two times the Fed hike, the market went down, up and then immediately down. And then everybody's expecting that this time. And then what happens? The market just goes up and starts ripping, which obviously we were prepared for already. So what's going to happen this time? Probably whatever's least expected. So that's it. That's our crypto today. I'm not going to look at a bunch of like trash bag altcoins. 90% of them look exactly the same. They look very similar to, Bitcoin. And then there's like, you can count on one hand how many of them like actually look good. All right, so let's jump into our traditional markets now. All right, so we have TNX 10-year. So it did exactly what we said. It's back on top of the 821. Looks like it's getting ready to cross the upside. Now we could get rejected and break down from here. It's possible. Do we think it's realistic? Obviously, the yield curve's inverted. We know that. Everybody knows that. Even people that don't know what it means know that. Is it realistic that all of a sudden yields continue to drop and we continue to go down from here? Full on knowing that we're definitely, like, I shouldn't say definitely, that we're going to, right now, the future market of the Fed funds rate is projecting around a 50-50 chance of a 50 basis point hike or a 75 basis point hike. So regardless, if we get a 50 basis point hike and we're currently at 2.33, right? Was it 2.33? Wait, hang on. Let me do the math in my head. Yeah, 2.33 right now. So is it realistic to think that this is going to break down and go lower than the Fed funds rate, that the 10-year rate is going to be inverted with the overnight rate? I mean, it's not. It's really not. And we already got back down here to the 2.5. The 2.33 would be inverted. So what if, let's just say the Fed does a 50 basis point hike. That's going to put us at 2.83 effective Fed funds rate. So 2.83, where is that at? Oh, okay. So that's right here. That's the 821. So literally a couple weeks from now, Jay Powell is going to waddle his little midget ass up to the stage, and he's going to stand in front of the podium, and he's going to say, blah, 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 and just, spit his little garbage speech or whatever that he says. And then afterwards, let's just say he hikes 50 basis points. So then the Fed effective funds rate is going to be 2.83. So is it likely that we see the 10-year Treasury yield invert with the overnight rate? Obviously not. Obviously not. I mean, that's ridiculous. Is it possible? Sure, anything's possible. So in my opinion, this could do whatever it wants for the next couple of weeks. But by the time Jackson Hole, it's not going any lower. It's not going any lower than 2.8. Definitely not going to go down here to 200 exponential and simple. It's for sure not just going to go down unless the Fed decides to cut rates. Is the Fed going to cut rates? No. Why would the Fed cut rates? Right? People are calling for a rate cut from the Fed as they're still ramping up the balance sheet runoff. So we haven't even reached the target for the balance sheet runoff, which the Fed expects then to continue on for the next 3 years to sell down the balance sheet. And by sell down, I mean they're actually just letting expirations happen naturally, and then they're not reloading. So like, say for instance, you bought we'll just keep it simple. Say for instance you bought, a 3-month treasury or whatever, or whether it's mortgage-backed treasury or whatever, or mortgage-backed security or treasury. Let's say you bought a 3-month. You have a bunch of different expirations because they're buying all the time. You maybe buy one this week and you buy 2 next week and then 1 the week after that. They're going to all have different expirations. So as they expire, normally the Fed will go back and pick that back up to keep their balance sheet stable. As they expire or run off, they go back into the market and they buy more. So the balance sheet goes up a little bit, then it goes down a little bit, then it goes up a little bit. So when people look at that Fed funds or the Fed balance sheet chart, to people that don't know what they're talking about, the uninitiative, the brain dead people, the morons, the ones that just copy what somebody else does and then talk about it like they know what they're talking about, whatever. When those people pull the chart up and they go, the Fed is lying. They said they were going to start selling off their balance sheet. Well, first off, they said the word sell, so they already don't know what they're talking about. But maybe they're just trying to keep it simple because they're not using the correct terminology. That's fine. We'll give them benefit of the doubt. But then after that, they start talking full moron and saying things like, look right here, they said they were going to sell and it's going up and then it's going down. So everything they just sold, they bought more of. So we know that they're obviously morons because what's happening is some things are expiring. So the balance sheet goes down. Obviously it runs off the balance sheet and then they go in and buy more to push the balance sheet back up to that side. And then other ones expire and they go. So it's going to oscillate in that range. The idea is not that it just goes straight down. The idea is that it goes down a little, then up a little, then down a little, then up a little. But the idea is the trend, that it trends to the downside. That's what we're looking for. So now let's talk about trending to the downside. Speaking of trends, oh my God, flawless transition. Cha-cha, got it. Oh wait, no, that was terrible. Damn, I got to stop saying flawless transition because I feel like that ruins it. So here on our 10-year Treasury yield chart, we have a peak right here. We have a peak right here. Obviously, we have the low right here. And then that lined up with the low right here, which obviously, oh, look, lucky. So we hit the bottom right here. We come all the way back up to the top. We nail our head on the top, and then what happened? Well, confirmed breakout. And where's our measure move to the upside? That's it. Bottom of the channel, top of the channel. Bada boom, bada bing. Where are we going? 3.269. See you back at the top. What happens after that? I mean, we're probably going to new highs. And, you guys know my base case is that we go to 5% very soon, because this is the final part of this, and then we'll move on to our regular stuff. But this is very, very, very important. And of all the internet on all of planet Earth, I have literally never heard anyone talk about the fact that if the Fed, let's say the Fed comes out and Jay Powell comes out like the little pussy is, and he gets up on stage and he's like, oh, I'm such a little bitch. So what I'm going to do, because I'm a scared little girl, is I'm going to raise 25 basis points. Let's just say he does that, okay? Which is like the most bullish case scenario like ever possible, with the exception of him just saying, we're not going to raise it all right now. Let's just say they raise 25 basis points. We will have confirmed a technical breakout on the Fed funds rate and the 40-year downtrend from the late 80s. So we'll have taken out the previous high, and then after that, the next previous high before that is 5 point whatever percent. So what do I expect? 75 basis points. What could happen? 50 basis points. What if I'm wrong and we get 25 basis points? I'm still right, even though I'm wrong, baby. Because if we get 25, 50, 75, 1 basis point, we could get a billion basis point hike. And you know what? I'm right. The only way we're wrong is if we get 0. And then, what are we really doing? Well, we're probably still right on direction. We're just waiting on time. But, I don't think they're going to come out and say 0. People are excited because we saw inflation go from 9.1% to 8.5%. Awesome. That's great. Any other time in history, with the exception of, that Paul Volcker, little run up in the late 70s to the 80s, any other time than that, if we saw prints of 8.5% inflation, the world would be melting down. But right now we're happy because it was 9.1 before. Okay, sure. Sure. In the words of the Bitcoin cult or the crypto cult, if you don't look at the big picture and see what's likely to happen and the possibilities and what it's really going to mean, have fun being poor, because that's probably what's going to happen. So 10-year treasury, exactly what we said. Getting ready to burst to the upside. In my opinion, we'll see. Maybe I'll be wrong and this will just roll back over. Bonds will go through the moon, and, the Fed just eases and they decide, no, you know what, actually about the balance sheet runoff, instead of just the 10 trillion that we got on here right now, we don't even care about balance sheet runoff, and we'll just, everything's fine. We're going back to 0. We start cutting rates again. And it could happen, but I'm not betting on it. And then we know, obviously, how many people, there's a lot of people right now that I really respect, like legitimate people with a gigantic megaphone, way, way, way bigger than mine. And most of these people are way, way, way richer than I am. Okay. We're talking about $100 billion hedge funds. We're talking about big names, big people, big money are talking about the bond market and how this is the best time to buy bonds. Bonds are going to go parabolic. We've never seen this bad of a first 6 months in the bond market. We've never seen a time in history where, the 60-40, 80-20, whatever portfolio has gotten wrecked this badly, because normally bonds are where people go to run and hide for safety when the stock market's selling off. So that was just a one-time thing, and now we're just going to go back to normal, and it's just bonds to the moon. Or we already broke out of the bonds. We broke out of the downtrend. Yields, the whole thing, it's happening right now. The yields already broke out. We're just waiting on the Fed funds rate for the official, you're wrong, bitch. We know they're wrong with pretty good certainty. We're just waiting on the market to come out and high-five us and say, yep. So we'll see what happens. But I wouldn't bet, I wouldn't want to take the other side of that trade. I'll tell you what, the bond trade. I wouldn't want to be bullish on bonds right now. All right, so on to the oil. So once again, oil, we have absolutely nailed this thing. We see this clear descending channel right here. You guys know my base case on oil, on energy is much, much higher long term, but we're in the middle of this correction, this retracement, whatever. So we talked about this potential time right here. You guys know I obviously did not take this trade. we were talking about the potential of the breakout, and that what we needed to see was this close outside the range, and then our next candle to open and then close outside the range. So we would have had, obviously, a slightly higher entry than this, but that was if we were going to come up here and put in. Now, it doesn't mean we don't still come up to that level, but right now, the longer time that goes by inside this channel and the breakdown, the more likely we are to continue to the downside. But we obviously have the bottom of this sort of descending channel right here in orange, and we're back at the bottom, and we clearly bounced it one time, two time, and then we came down perfect right here, pushed back up to the top of our descending channel in white, and then we came straight back down to the bottom of that again. So we have a clear little like pinch that's going on right here. And when we get pinched into an area like that, we're going to explode to the upside or we're going to explode to the downside, one or the other. We don't know which one, obviously, but if we explode to the upside, we invalidate the white channel and we're done with that. If we explode to the downside, we invalidate the orange channel and we could potentially stay inside of the white channel. The white channel is shorter term, so it's less reliable. The orange channel has been going on for quite some time, so obviously we respect that slightly more. It's important to note also that we have broken down below the 200 exponential and simple, back tested them, and gotten rejected. So the 200 exponential is already red. The 200 simple is starting to roll over. It's basically flat. Any more time underneath here, it's going to flip red. Now, does this count as a reversion of the mean? It's an initial reversion of the mean when we break support, we back test it. But then we usually get a little continuation when it's clear we've broken down. And then we get the big reversion of the mean, the real one. More than just a couple days after breaking down. So we'll look out for that and still potential for oil. But you know what? I'm not even going to do the long-term one right now because you guys, I've done it a million times. All we're doing is backtesting our longer-term 200 exponential and simple, before confirmation that we're actually bullish and then go to the upside. So now let's look at the Dow. So obviously, again, everyone is super bullish. It's over. The bear market's over. We're going up from here. I literally saw, God, I can't even remember who it was, but it was like, who was it? I want to say it was on CNBC, and it was one of their main analysts. I can't remember. And they were literally saying that this is it. We're bullish now. It's done. The bear market's over. And then he explained two situations and said, and if either one of those situations happens, it's bullish for equity. And those are the only two possibilities. So either way, it's bullish. And I literally laugh out loud because I'm like, so there's a 100% probability that equities are going to be bullish because of your two scenarios, which are the only two scenarios possible. Okay, we'll see. We'll see. So here on the Dow, we backtested 200 exponential. That was the first target. We took out this. We invalidated potential bearish divergence. We backtested the 200 simple. We got back above it. We know that oftentimes when we reclaim those levels, we then end up at new lows. So let's not get too excited right here after we literally got the move we were expecting. And this is like our take profit area is between the 200 exponential and 200 simple. We got the sell. We got the buy. We have almost a perfect spacing right here to potentially get a sell again. And when we look right here, what do we have? We have our first drive. We have a second drive to the same level. And then we have a third drive that's slightly lower right now. We have the sell. We have the buy. And we're spaced out perfectly. Let's say it's not tomorrow. Tomorrow's Thursday. Let's say Friday we get the sell-off and it crosses back down. It would literally be a perfectly spaced sell by sell with bearish divergence. So we'll see what happens. We'll see what happens. All right. SPY looks very, very similar. I've made it all the way up to the 200 simple. Again, playing out very nicely. Hard sell signal. We're still technically in the bullish control zone. We're still all the way up here at 91. So still a little ways to go down before we actually confirm that. I would imagine that would line up something with the back test. Remember, as long as we're between the 200 exponential and simple, my base case is that we oscillate in that range for some amount of time and start to build what I would think would be a plateau. And then eventually we break the plateau, probably sometime around that Fed Jackson Hole meeting. And then obviously we have built now what amounts to basically a powerful uptrend. So we have this blue support now from this candle here on the daily to this candle here on the daily, this candle here on the daily, and that's where we are now. So one of two things is going to happen. We're going to find support here and keep moving to the upside, or we're going to break down and let go. And then if we zoom out and look at the big picture, well, again, just like we did with the Bitcoin, we have a high right here, we have our high right here, and then again, this was our target, the 618, the red box, the confluence, and where is that at? Exactly at our target. Exactly at the 618. Exactly at the top of the descending broadening wedge. So does it seem likely that we're going to top right here, the area we've been expecting to top at, that we've been planning to, that we're excelling into? 100%. It seems very, very likely. Now, is it possible we consolidate, break out, go to the upside, new all-time high? Sure. It definitely is. But it seems very, very likely that we're actually getting ready to just, remember now, if we just go sideways here, we break that blue support. So the only option right now to not break that blue support is to continue to the upside. And we have a very, very strong resistance at that level, moving averages, internal retracement, Fibonacci's, all kinds of stuff. So does it seem more likely we break through all that stuff and just go bull-tard? Or does it seem more likely we break down from here? So again, I very much expect, S&P to be at or SPY in this case, to be at 417 very, very soon. But I do expect to just kind of chop around there for a bit until we get closer to Jackson Hole and then probably the meltdown. All right, Qs, triple Q, NASDAQ. So we don't have that same kind of clear cut case that we do with SPY, but you guys know, obviously, I don't respect NASDAQ and Russell at all. The Dow and S&P get all the respect. The Russell and NASDAQ get zero. Zero. But that's essentially what we have. Come down here, we hit it. We technically have broken out. We're above the 200 exponential, slightly below 200 simple. Seems likely we make it up there. If this just rolls over now, it probably underperforms. Hard sell signal still in the bullish control zone. Starting to look a little tired. And again, we see, obviously, we have a series of just higher lows, and then we just start going straight up. Now, we'll talk about something that I made up. It's a fake term, okay? Because no one else obviously uses it because I made it up. But it's called marching price action. So when you see methodical moves sometime in price action, like for instance this, where we're just kind of, I call it marching, because we see similar size candles with very, very suspicious looking price action, essentially just moving price to key targets. And it looks like basically market makers are just kind of pushing the price up slowly, or pushing it down slowly but surely. And then as it goes, we're building confidence. Everybody's getting excited. And then finally people are like, oh man, it's going to go. And then they FOMO in. Typically that's right around the time where they stop marching up price action. Another thing I didn't talk about on Bitcoin was the volume. But we're going to talk about it right here. So let's move this trash out of the way for a second. And let's focus on this volume right down here. I mentioned it in a video last week, how I give Bitcoin zero respect because of the volume. Well, let's look at the NASDAQ, or the Qs in this case. We obviously have a peak on volume right here. Then we have another lower peak on volume right here. And we see just declining volume. And then we see the whole way down. And then we see right here, again, we have a peak around here at the bottom. And then again, just declining volume. As price action goes up right here. So what does that mean? Eventually you're running out of buyers or you're running out of sellers. So on the way down here, as we're basically going down, we eventually are running out of buyers. And that's where we get this little mini peak right here, or around here, maybe a divergence peak, whatever. And then again, we start moving to the upside, and now it looks like we're running out of buyers. So as price action gets marched up on low volume, is that suspicious at all? Nothing to see here. It's fine. Everything's fine. As the dumpster rolls by on fire. So the Russell IWM, again, exact same thing. Push up here, retesting the key levels. I'm not going to do it again because it's the same thing. Industrial, we don't even need to look at all these sectors because it's just the same thing. They're just varying levels of, the moves to the upside. Some are at the 200 exponential, some are at 200 simple. Most of them are chopping around between them. Financial sector, same thing. Consumer discretionary, same thing. Tech, same thing. Transportation, same thing. Communication, absolutely pathetic. Looks like crypto. Real estate, same thing. Consumer staples has pushed back up and is technically, trending to the upside now. So what do we expect? Either a lower high or a new all-time high. We don't know which one it's going to be. My bet is on lower high. But the consumer is strong. So let's talk about the consumer is strong real quick while we look at consumer staples. So we have a couple factors here that are very important to consider. One, we have record high credit card debt in the United States, over $1 trillion. Record high credit card debt in the United States, over $1 trillion. Average credit card rate right now is almost 20%. It's like 18.5% or something like that. So there's $1 trillion in credit card debt, and we have seen it appreciate, like accumulate, or basically the ramp up from not nearly as much credit card debt to $1 trillion faster than ever in history. So what does that mean? Well, there's only two reasons people put stuff on a credit card. They're either very, very confident in the future or comfortable spending money on a credit card to get some perks or whatever, a couple % back, or earn some, miles or whatever, knowing that they could pay it off into the future. That's the good case scenario when people put stuff on credit card. The bad case scenario is when people have a lifestyle that they've gotten used to living beyond their means, obviously. And so in order to live beyond their means, in order to keep up with the Joneses, in order to, not reveal that they're actually morons to the world, they have to continue to live that fake lifestyle outside their means. And all of a sudden, what happens? We got to start putting stuff on your credit card. What does it take for you to put stuff on your credit card and not pay it off at 18.5%, interest rates? It's desperation. No one takes a short-term loan, essentially, which is what a credit card is, for 18.5% unless they're absolutely desperate. Absolutely desperate. So what does that mean? They're probably putting important stuff on their credit card, like rent, like car payments, like food. Now, are they buying TVs on their credit cards? Are they buying new shoes on their credit cards? Sure, maybe. Some people are, but this is a massive, massive red flag. So now let's talk about the next reason why the consumer is strong. Well, we saw Walmart came out and did a breakdown and essentially started talking about what was going on and the trends. And now, look, I know people don't want Apple and Walmart or Apple and like TikTok and all these like apps or whatever to have their data. But that data, I mean, I get it with YouTube analytics. I get all kinds of data about you guys. It tells me where you live, your middle names, no, hang on, that's not right. No, the data I get tells me like your age and like what country you live in and stuff like that. But the data they get, that's the data. They get the data that tells them, your middle name, where you live, your sexual preferences, what your purchases have been. I mean, they get every bit of data on you. Now, different levels. Obviously, TikTok has every bit of data on you. Apple has a little less, but Walmart either has data from that stuff or buys it. So regardless, Walmart came out and started disclosing a bunch of data after their earnings report, essentially saying, hey, look, this is what we're seeing, and this is what we're seeing from different demographics and whatnot. And they essentially came out and said, look, hey, poor people that make under $50K a year are literally buying necessities only. They're not out here wasting money on crazy stuff anymore. And their average cart size, I can't remember the exact details, so don't quote me on this, but you can find it. It was right after earnings. I think, who was it? I think it was the CFO? CEO? I can't remember who it was. But anyway, he came out and basically said, no, it wasn't the CEO. I can't remember who it was. It was someone important came out and was like, from Walmart, and said essentially that they went from like their average, whatever it is, like cart size or purchase per customer, from like $60 to $30. So poor people are buying half as much stuff right now. So they're probably shopping more frequently because they can't afford to buy a week or a month of groceries all at once. So they're buying less at a time, and they're sticking more towards like necessities. And a lot of those people will be spending less and less at Walmart, and then they're going to be making a second trip to the dollar store to buy anything they can get at the dollar store, even cheaper. And then part of the reason that, and he essentially came out and said, look, and we actually were expecting much worse earnings, and then we actually did okay. The reason is because we actually saw people that typically don't shop here or shop much less here, which are people that make, around 100,000 to whatever the next range was, are actually buying a lot more here. So it reasons to say that those people were buying stuff somewhere else better than Walmart, and now they're buying at Walmart because they no longer can be as, reckless with their spending or buy that gourmet brand or from that gourmet store or whatever you want to call it. So essentially everybody's getting kicked down a notch. The regular Walmart customer is becoming a Walmart / dollar store customer. The Target customer now, and we'll get to that in a second, is becoming a now like kind of Target, mostly Walmart customer. And then, it's basically everybody's getting bumped down a notch. That is not what a consumer that's strong looks like as they rack up credit card debt through the roof of trillions of dollars. That's not a strong consumer. And then Target just came out, and look, I don't know what people are talking about, saying that their earnings are down 90% and all this stuff. I looked at their data. It's not. They're down they had like a 50% miss in earnings. They're not down 90% on profitability or anything. It's all BS. But it doesn't look good. It's not good, obviously. So if Walmart still did okay after guiding down and Target did not, it tells us again, Target's like a little step up from Walmart. So we see everybody basically getting notched down. So the whole argument or statement or fact, as people would claim it is, that the consumer is strong, brain dead. Those are brain dead people who are saying that. Okay. Just because all your buddies are okay doesn't mean that average Joe and Jane, who are racking up credit card debt, like literally record high, at literally record high paces, at literally record high percentage rates, are strong. It doesn't make any sense. All right, so XLV is next. Damn, that was a terrible transition. I'll have to work on that. So XLV is next. Healthcare holding up okay right now. Basically backtesting that previous high. Trying to get back on top of 200 exponential and simple. We do have a buy, sell, buy right here. That's like super weird. There's technically a sell before that. Just don't worry about this little cluster of whatever's going on here. We're looking for a potential top sometime in the near future on like all this stuff. We have technically flipped the 200 exponential and simple back bullish right here. Well, kind of. As long as we're on top of them, it looks okay. Healthcare is obviously defensive. Utilities putting in a new high, as we have discussed many, many times. And obviously the trend has reaccelerated. 200 exponential is getting ready to cross back up above the 200 simple. We are very much in the bullish control zone. We have all green histograms, blue slope line. And again, utilities, super safety sector. Now, the thing to remember about utilities is from that recent swing low to the high right here, it's up like 20%. So it's really good. Obviously, 20%, nice move right there. But like literally everything else on earth went up over 20%. And this is like one of the most bullish sectors. So that's why it's worth noting that it's like, look, you're not going to get rich in utilities probably, but you're not going to get poor either. And then XLE energy. So obviously energy still, the second most bullish sector right here. We bounced the 200 exponential and simple. We came up, we put in another higher low, which is good, but then we dropped out right here. So what we need to see for this is a higher high, and that's going to look really good. And if we take out this resistance right here, that higher high is likely going to give us, I thought we had an inverted head and shoulders on here. Okay, I thought it might have been on my other chart. We talked about the potential of essentially, something along like this line. Oh, you know what? I can't remember where I put that chart at. But essentially something along this line where we basically have a potential for an inverted head and shoulders right here. And if we break through that 236 in purple, there's a possibility, we get that measure move to the upside. And it could be a nice move to the upside, basically, to retest the highs. Now, is that going to happen the way the oil chart is? It doesn't seem likely, but we don't know. Oil might be ready to explode to the upside like we discussed. Are we going to top out the 618 and it just rolls over? So now we have a bear case. We have a bull case. We don't know which one's going to happen. I'm still very, very bullish on energy, but it would not surprise me to see some short-term like downside. We'll see what happens though, because the closer we get to winter, the more likely we just start moving back up, in my opinion, on energy. But the slower, if we start to see a slowdown in the economy, it's going to obviously kill a lot of demand as well. And we're going to get to it a little bit on the wheat chart. Hopefully we'll get there. I've been going kind of long here, hour and 34 minutes. If we look at the wheat chart and lumber and some of those, we'll see a lot of these commodities have given back everything. So it was like, oh, wheat's going to cost $1 trillion going into the future because of the war. And then it's like, oh, actually wheat's right back where it was before. So, are people wrong that wheat's going to go through the roof, or are they just wrong about the timing? I suspect it's the timing. And again, I stress it all the time. You want to make your life harder? Worry about timing. You want to make your life easy? Worry about direction. So here we have XSD semiconductors. What's happening right here? A high, a low, a lower high, a lower low, a backtest of 200 exponential and simple. Likely rollover when this fails right here, and then new lows. Then we'll see that takes us to, obviously, we have technically a like macro swing high right here, obviously. If this was our leg down, where are we going to expect for future targets? Well, we've been discussing this one for quite some time in advance. And this essentially just looks like a textbook distribution pattern, head and shoulders. So we'll see. We get a little higher to the 0.5. Do we just roll over now? I don't know what's going to happen, but it seems likely that we top out somewhere between the 382 and the 0.5, or even between the 0.5 and 618. Regardless, we're a couple percentage away, in my opinion, of a backtest of heart line. And if we come back down to the heart line again, likely breaks, and then we start looking at our measure move, not crazy to think that XSD is down at $100. $100! If you know what movie that's from, let me know in the comments. It's actually $500 for the rest, for the record. All right, so now DXY. Let me jump over in the chat real quick, actually. All right, so Angel, good to see you. Honkiness, always a pleasure, my friend. Crypt Yellow Vest. So what is your thoughts after FOMC? That might be something different. I'm just kidding. Minutes meeting. I mean, the FOMC minutes is like. I mean, what is that? It's last month's minutes. So that's their conversation at the last meeting before we got the recent data. So since then, the data has changed. Obviously, they hiked 75 basis points, and then we see what happened afterwards. So I don't know. I wouldn't read too deep into that. There's obviously like a little bit of dissent, or, a little back and forth. Some people are like super hawkish. Other people are starting to get like a little more dovish. But the truth is, if you look at the dot plot, the expected Fed funds rate, and again, I posted that up in the group for you guys. You can go in there and look at it. And every single one of the Federal Reserve voting members has essentially a target by end of year of, I want to say it was like 3.25% or higher. So, I mean, we're at, what did we just say? Oh my gosh, why can't I remember? So what, 1.5, 2, 2.25, we're 2.33 right now. So if we get the 50 basis point hike, that puts us at 2.83. If we get the 75 basis point hike, that puts us a little over 3. And that's the bottom of the range. And we still have 2 more meetings after that. So do we get 75, then 50, then 0? Do we get 50, 50, 25? Do we get, 75, 50, 50? I mean, I don't know. We don't know exactly what's going to happen. It's hard to predict out into the future. But if the Fed is quote unquote data driven, all of a sudden now, they were never data driven before, but now they are. Okay, whatever. So we'll see what happens. It just doesn't seem, I mean, I think everybody's going to be on the wrong side of this. But, I'm just using like actual statistics and facts. But yeah, I mean, I think everybody's brain dead. The markets, at least. But I mean, that's fine. We can make money when people are acting like brain dead morons. There's nothing wrong with that. We just have to remember, like, hey, this is not the trend. The trend is not up. We are not in a bull market. This is a bear market rally. The most violent and the fastest. I mean, we're just going to V-bottom right now and everything's just going to be gravy again. The only time we've ever V-bottomed in all of existence from the beginning of time, since dinosaurs were on Earth, the only time we have ever V-bottomed is when the Fed pivots. So if you're betting on a V-bottom, which is what it's starting to look like we're doing right now, you're betting on a Fed pivot. So have fun with that. Don't fight the Fed on the way up, but on the way down, the Fed is dumb and we don't care what they say. Okay, I mean, that's a great tactic, I guess. And I'm not like hating on you, Crypt. I'm just saying. Yeah, next news from the Fed is in September. That is correct. There's no meeting in August. The next one is in September. I posted up the schedule in the group too. So Angel says, cry laughing face. Yeah, I agree. I'm not sure what you're talking about, but I'm sure it was funny, whatever I did. And I can't see what that says. KLL.C says, brilliant as always. Thank you. Of course, my friend. Of course. Appreciate all the compliments and kind words from you guys. All right, so let's keep moving on here. So we got the DXY, obviously the dollar bill, y'all. You know, back bullish again, 821 cross back to the upside. So again, exactly what we said, clearly in a bull trend. You know, continues to the upside, a little bit bullish reset, continues to the upside, new highs, bullish reset. Indicator oscillators trend all the way back down to the bearish control zone. Price action barely goes down at all. Back test support, find support, moving back to the upside. Momentum starting to build to the upside again. We do have to be careful, you know, of this blue slope line right here. But, you know, when we come back up to it, we'll pay attention and look for that rejection. But you guys know I'm extremely, extremely bullish on the DXY. And remember, I've been extremely, extremely bullish on the DXY. I'm not one of these, you know, recent people that's like, oh, yeah, all of a sudden, this DXY doesn't look so bad. Oh, and also, let's remember, let's call out everybody that called for a top in the dollar recently. And we'll call them out. As soon as we put in a new high, we'll do a whole video where we just talk about how stupid they are. Oh, God, people are so stupid. All right, so Tesla. So Elon was dumping on everybody's face again. And then he decided to come out. He said he was going to buy Manchester United. Oh, my God. It must be nice to be Elon and just troll everybody all day, every day. If anyone else did what Elon did, they would be at least getting like investigated by the SEC. Elon literally is just giving his finger to the world. I like the guy more and more. Every day that goes by and he does more and more dumb shit to troll the world, I like him more. He is absolutely hilarious. I mean, just straight up troll. I love it. I love it. But Tesla, look, I mean, are we topping out right here? I mean, look, I might have got stopped out of this trade like an idiot because I moved my stop loss up too soon. It is what it is. But I mean, we're at some clear resistance here. If this rally has legs, it could definitely go higher. We could see it as high as, you know, over $1,000, 1,065. Obviously, we have this split. We know typically we run up, you know, prior to the split. So we'll see what happens. But, I mean, I wouldn't want to take a position on Tesla right here. You know, not with bearish divergence. I don't know. It is what it is. You never know what's going to happen. I wouldn't bet against Tesla, but I'm not betting on it right now. I'll tell you that much. NVIDIA underperforming. I mean, what a dog. NVIDIA has been a consistent outperformer, so I can't bust his chops too bad, but man, what a dog. Amazon filled that gap, back tested 200 exponential and simple. Again, if we drew, you know, I mean, just connect these points and see like, okay, does it seem like this would be an area we would potentially top out at, depending how we draw this? I mean, seems pretty likely to me, so. But again, this was just a perfect play. I mean, we talked about this bottoming pattern, this W, double bottom, the breakout right here, and then boom, got the measure move. It played out almost perfectly. So can never be mad about that when technicals are trading technically. Google is next. Obviously, back testing 200 exponential, 200 simple, still a ways up. So we could still have some legs. But, you know, again, I mean, we're at like exhaustion points on these charts. And, you know, everything that has had a nice move has basically hit its targets. And then a bunch of stuff is like not moving anywhere. And like, I'm not just getting excited like, oh, I want to bet on the worst performing asset right now because it hasn't moved yet. Yeah, I don't know. Everything, you know, it's not a good idea in my opinion. Microsoft, back testing 200 simple. Again, just same thing. We see, you know, if we basically draw from the, what was it, the top of our head or somewhere around there. We'll just use right here. You know, somewhere right there. We basically hit resistance, take profits, get a little gap up. Everybody's like, oh, breakout, we're going to the moon. Maybe we do. Maybe Microsoft's at new all-time highs very soon. I locked in my gains, and I'm completely happy with that. Apple, again, they're calling for new all-time highs. I would be very, very careful with Apple right here. Obviously, there's definitely some bullish reasons it could be doing what it's doing. Massive amounts of buybacks. Warren Buffett, you know, just nonstop, just pouring money into Apple. We'll see. You know, Warren got rich years ago by pouring a ton of money into Geico and a couple other companies. I mean, he obviously Berkshire Hathaway, he bought like textile company back in the day. If you've never read his the book about him, Snowball, it's a read. It's like 600 plus pages. I mean, and I'm going to tell you right now, no offense to the author, but you could trim that thing down to about 150 pages and you wouldn't lose anything. But it is what it is. So we talked about marching price action, marching it up. I just talked about that earlier. You know, my made up term. This is what marching up looks like. Just price action, just same equal candles every day, just marching up here. And then again, marching down right here. Just, I mean, does this look like organic movement? No, I don't think so. And then what is this? Are we just marching price action up? Does that look like organic movement? And it's like, oh, we broke out right here. So we're bullish, right? Maybe. I mean, we're a couple percent off the all-time highs. So at this point in time, why not just wait for a new all-time high? And then you can buy a blue sky breakout if you want to. I don't like doing that, but you can. You can obviously do whatever you want. But don't love this. 200 simple is clearly on top. We'll see. Definitely losing momentum. You know, maybe Apple does have another leg up here. Maybe it does. I just find it, I doubt that we're going to have this massive company putting in new all-time highs while everything else is melting down. But, you know, we could be wrong and just everything starts melting up and Apple was like, told you so. I'm the Ethereum of the stock market. Definitely possible. Where are we at right now? Hour 46. Do you guys have anything in particular you want me to look at? I'm not going to run through all of these again. I didn't even like reload different stuff here. That was our last one. If you didn't check out the last video, highly recommend it. I was talking about essentially how the composition of the major indices is essentially like a handful of stocks. And that's why the overall market from a distance, when you just look at it, looks good. But then when you look underneath the surface, it's just full of cracks. So let's do our gold and silver. So gold obviously looks terrible, starting to roll back over, hard sell. So what is this? Broke down below, back test, fail, probably going to new lows. I have talked about this countless times, and I'm going to mention it one more time again, and then never again after that, at least until our next stream. This right here was the peak in gold, 2011 run up, 12, 13 peak, right before the 821 monthly crossed the downside, and we entered into a long bear market that lasts for a decade and lost 50% of its value in gold. Right before that happened, we see the same signature. And again, this is the one we talked about earlier, where we break down, we backtest the blue slope line, it fails, and we roll over. Break down, backtest the blue slope line, and it rolls over. I mean, that looks suspiciously familiar. So, you know, without getting too crazy right here. Oh my God, what is that? Jesus. Without getting too crazy right here, let's just say, you know, and again, this, like, whenever I do some of this stuff here, full disclosure, it's not like rocket science, okay? This is not the most reliable way to do anything. But if we just basically look at this price action right here, and we just superimpose it from that second peak here. So here we have a peak, then that move to the downside. Here we have a peak, then the potential move to the downside. It looks like we're setting up for this, you know, again, it's just that same move. It's not rocket science, but, you know, maybe something similar to that happens. You know, that puts us down basically somewhere in this range for gold. And look, the 200 exponential hit right around here, right around where this bounces, double bounces off support, and then it breaks through. And then essentially, you know, we come back down, find support around 1200. Maybe it doesn't get that low. Maybe we bottom out at like 1300. I would just be really careful right now. Now, what does this mean? I'm not selling gold right now. Gold for me is like a savings account. I take some of my profits from trading or, you know, whatever it is that I do on the side. I take all of my earnings from OnlyFans and I invest that strictly in precious metals. All of it. Every penny. Full disclosure, every penny I have ever made on OnlyFans, I have invested in gold, okay? Plus a lot of my other money as well. Okay, but it's a savings account. I look at that as savings. It's not to make money off of. Doesn't mean we don't make money off it in the future. But full disclosure, every penny of my OnlyFans income. And then going on to the GDXJ. This is it. I mean, same thing, just looks melting down right here. This is gold and gold junior miners. Melting down here. Just looks absolutely horrendous. Looks much weaker than gold, obviously. And then if we go to silver, XAG on the daily, again, just completely melting down right here. Looks terrible. When we go to the monthly, we're already down at the 200 exponential and simple. The 200 simple is above the 200 exponential, and obviously we put in a massive lower high right here. The last time, let's just look back here again, does not have to happen, but if we look at like the same market and we look at like potential similar like types of moves or styles of moves, this was the 1980, silver squeeze right here. And we bounce down all the way off the 200 exponential and simple. We get a nice run back up to the upside, and then we consolidate that level again. And then what happens after that? Silver just goes sideways to down for the next 93 years. 93 years. Or no, that's not right. Hang on, let me check my math. But anyway, we go from 50 all the way down and bottom out at $3. It's not going to happen again, obviously. This is a crazy squeeze and everything. But this kind of price action, just because we went really, really high, maybe it should have stopped right here. Silver maybe should have stopped at 27, but instead it went to 50 in like a gap up single candle, monthly candle. So regardless though, let's just say it went to 27. We ignore this right here. That's just some fluke silver squeeze, whatever. I'm not talking about the silver back squeeze. I'm talking about actual real silver squeeze. And then back test 200 exponential and simple. We see the 200 simple crosses up above right here. We put in a series of lower highs and lower lows, and then we proceed to go sideways to down for what was it? Wasn't it 90 years? I don't know. It was a while. We haven't even broken out to new highs yet. But from when we peaked to when we troughed, it was 4,808 days. So according to my calculator, that is 90 years. Now that I'm sure that's not right. It's like maybe 14 years. But then after that, a run up, double top, whatever. So now when we look at this, we see the 200 simple on top right here. We know we're probably going to bounce this, lower high, hang out here for a little bit, another little dead cat bounce, hang out here for a little bit, start going lower. It's not crazy to think that, we see silver in the teens, the medium to low teens for like years to come. And I get it, the electrification of the future and the limited supply and the deficit of silver and all that stuff. And I get it, but it hasn't worked for, since the 80s. So why would it work now? Silver juniors look like trash, completely melting down. So CCJ, Cameco. So we talk about the uranium stocks. Obviously, Cameco is holding up pretty nicely compared, but all the other ones are like rolling over. They all look horrendous. And this is accelerating to downside at support. When this breaks, it's going to break violently. And when it does, what we're looking for is the back test of this green support right here, which would give us roughly like $22 target. And then realistically, we just want to see, something like, this was our low right here, basically. We want to see this hold above that low. If we take out that low, we have a high, a low, a lower high, and then, same low, or if this is part of the move, then a lower low. Looking to load up on this in like the 17s. And as it starts getting relevant again, I will start pulling up all of the uranium stocks and everything. But I just try to use like one typically as like a scope. Same thing with like NVIDIA. I use NVIDIA because it's one of the stronger ones. So sometimes it gives us a little more of like a bullish skewed picture, but it gives us the overall posture. And then everything else is just slightly worse or like way worse. Southern Copper Corporation, again, just a random copper one right here. But we see, obviously, this is important right here to pay attention to. From the peak back here in copper, which is, Dr. Copper, the commodity boy. We see essentially we had a 46% move to the downside. So we went up a ton. It's not like, oh man, copper is like way lower than it was before. But really what we do, we just bounce to 0.5, maybe back test 382, maybe we come down to the 618, maybe it's already bottom and we're going to upside. We don't really know. We have a massive amount of bullish divergence on the daily between these 2 points. And then we switch out to our longer time frames on the monthly, still very, very bullish, back at those peaks from like 2007, 2011, and then obviously we had a peak right here about 2018. We're just back testing that level. So we would expect around this level to hold as support, but what we have to be careful of is the 821 crossing the downside. So what is Dr. Copper telling us? What's telling us probably there's going to be a massive slowing of the economy. Now, this could go on for a couple months. It could go on for a couple years. The market is forward looking, but we have clear bearish divergence at the peak right here on the monthly, and then a meltdown. Gotta respect these charts. And then we look at the weekly, you know, slightly below 200 exponential and simple. We don't want to see this consolidating here. Obviously, we're in the bearish control zone, starting to try to build some strength. It seems more likely that copper heads, well, in this case, SCCO, heads to $56, then breaks the downside. But it can head to 56 and then break to the downside. Very, very, very good possibility that's what takes place. Just be real careful here with this and pay attention to what we're seeing on these commodities. So now we're looking at lumbers, futures chart. On LBS1. And this is just the current contract in front, futures chart. And essentially, we ran up from, I mean, we had a pretty insane run up leading up from 2015 to our peak in 2018. And then from then, obviously, you know, we saw lumber coming down pretty substantially to the trough in 2020. We know what that was, obviously. And then since then, it went parabolic, you know, full on blow off top, complete V-top, blow off top meltdown. And then we popped all the way back up here. And I mean, look, we nailed that too. We nailed it. Now, I don't trade, you know, lumber futures, but let's be real. We nailed that bottom. The 618 was our target to bottom and absolutely blew it away. And we had obviously some bullish trade setups in play here for 38%, 76%. I mean, we blew those away too, because from the entry point from that trade setup to the peak right here, 169%. And we did exactly what we said. Come up here to the 786, double top, and then a meltdown again to a slightly higher low. And now what does it look like it's going to do? It looks like it's going to rip back up to upside and put in another lower high. So essentially expecting something potentially as high as 954. Could easily top out around 804, but this isn't bullish. It's just, you know, just a slow, you know, kind of meltdown. And now eventually, do we go up from here or do we go down from here? We don't know. Obviously, this is it's a fairly neutral pattern. Excuse me. When we really look at it though, you know, arguably, this is based on closes on like the monthly, this ascending blue line right here. But if we really like kind of ignore that and look at where the actual bottom is, that zero line, and then we double bottomed at that level, we actually just have like a gigantic descending triangle on copper. Or I'm sorry, on lobster. On lobsters. Nope, that's not. Lumber. On lumber. Man, I really got to change that abbreviation. Because that, I mean, LBS. That's lobster futures, right? It's not lumber futures. Shouldn't it be LBR? Lobster. Rock lobster. So this is what I'm looking at, okay? Giant descending chart. Now, this shouldn't break to the downside, but, you know, we don't trade the chart we want. We trade the chart we got. So we'll see what happens. We'll see what happens. Maybe this even goes up slightly higher like that. Maybe it doesn't. This is not an actual like 5-wave fib. I just used it to kind of plot out what I was potentially expecting. We'll see how it plays out. But, I mean, let's be real. Probably going to be right. Could be wrong, though. But I wouldn't bet on it. We're on a lucky streak right now. So, you know, when I'm at the casino and I'm ripping roulette, okay, and them 0 double zeros are popping up and I'm just hitting jackpot, jackpot. Don't bet against me, guys, because I'm on a roll. And when I say I'm on a roll, I mean we're on a roll. So wheat futures, okay, this is the big, you know, oh, wheat is going to, the food shortages and the gazillion-dollar wheat and blah, 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 blah. And, you know, what does this correspond with? You know, the breakout, obviously, you know, the war breaking out and all that stuff. This was right around, essentially when we took out that peak, that all-time high. I was right around like February, mid to end of February, right when everything was like ramping up. Blow off top, lower high, complete meltdown. And where are we at now? Well, we're all the way back at that peak from 2021, you know, or this consolidation range. Flip this into a bear market. We know what happens when we flip into a bear market. The 200 simple accelerates over the top. We sell off to a new low, and then eventually we back test the 200 exponential and simple. So where are we going to back test it from? Well, we've got to really look at this chart and say, okay, what is our, matter of fact, I got to go to a longer time frame. It'll be a little more clear, okay? What does this remind us of? Do we see any other crazy charts like this with insane double tops? This was 2008. What happened in 2008? Any like important stuff or anything? Big events, world events. financial crises that encompass the globe. I can't think of anything off the top of my head, but any similarities here? Have we seen any similarities between what's happening now and what happened in 2000 or 2008? I have not found any, but I'll keep my eye out for it. He says in his regular voice while laying on the sarcasm thicker than ever before. So, I mean, what happened after that? Full-on meltdown. I mean, we don't know what's going to happen now, but oh my God. I'm sorry, I forgot that was on there. Okay, so yeah, exactly. We got up to the "you shall not pass" line, and Gandalf pulled out his staff and, beat the shit out of wheat, and that was it. And for the record, that has been there since way before this happened. So long that I actually forgot about it. That's hilarious. So "you shall not pass" line. The 0.5, and again, because we have a high to low and then a low to high, we have the yellow fib here and the green fib. A lot of the fibs are going to line up almost perfectly. As far as like the 382 and 618s, the 0.5s, obviously they're going to line up really close. We see a little bit more of a difference between the 236 and the 786. You could use one or the other. Arguably, when you do a double top like this, you can get rid of the high to low one and just use the low to high one. But I just leave them both on here, because it gives me like that tight little range to work with. So we lost the 618. We lost our ascending line right here. We talked about the parabolic trend. I talk about this all the time. Basically, I don't know why this one is white. It's supposed to be blue. And you know that. So we have from our low here to our next low. That is accelerating. We're clearly bottoming. And then again, here we have from that next low to the next low after that. Trend is accelerating. It's clearly getting faster and faster. Bigger moves to the upside, accelerating. And then the blue one, again, it's just marching up right here. And then finally, this is like, the final move, the blow off top, where essentially we can't even draw another line here because it's just straight up. That's what it should look like. It should just be a straight up line. Well, there's a tiny little slope. But I mean, that's it. And then that's when you know you're done. Obviously, a strong rejection. Gandalf smacks us with the stick. And then we try to creep up here a little higher, exactly like oil did. Get rejected by Gandalf again. He beats us a little bit while we're down. And then finally, we capitulate and crawl away. And now we have lost that white slope line, obviously. The straight up one. And now we're losing the blue slope line. Potentially come back up here, back test the 618 and the 382. And then that blue slope line. And then move down to our next target, which would be the 0.5. And then maybe we find support there. If we don't find support there and go higher, maybe we come down lower. We have our next support line. And then, of course, we have our 200 exponential and simple. So we'll keep an eye out for it. And again, we see the sell, the buy, and the sell. And where do we get that last sell at? The absolute to tippity toppity woo. And then what about the histogram? Well, it identifies some divergence between our peaks on the monthly there. So again, this technical analysis stuff, it just might work. All right, and then just gonna look at the pot stocks here real quick. Now look, we had a nice little run up on the pot stocks. This is what makes me think, and I know this is super, like, it sucks, but it's true. Pot stocks have been the worst performing assets, with the exception of things that have already gone to zero for like the last 4 years. So they've just been completely melting down. So when we saw the pot stocks move the last couple of days, for me it was like, oh, that's it for the little bull move, the dead cat bounce or whatever. Because when pot stocks start moving, you know people are desperate to make some gains because everything else has already made its move. So yeah, I mean, we don't want to end up upside down in any of these positions. Not really much we can lock in on something like Tilray. We had really nice moves in some of our other pot stocks, but Tilray didn't have much this time. Usually outperforms, but we saw Canopy have a nice performance. We saw, what was the other one? Hexo? No, that's not it. Well, there was another one that popped up pretty good there. It was like 20-something% day. I can't remember which other one it was. But yeah, anyway, so worth paying attention to what we're seeing in gold, which is obviously like kind of a commodity, kind of a money, whatever. And then we see like silver, it's like kind of a money, mostly, you know, a commodity for like industrial purposes. Obviously some jewelry and stuff, but there's no denying what copper, you know, was used for. Like nobody's out there like making like copper necklaces and like jewelry. I mean, well, I guess some people are, but come on. Nobody's speculating on copper as a future currency. And you're like, what about pennies? Well, they're going away. So the days of copper currencies are gone. I don't even know why we have pennies. Should just get rid of them. Just from now on, we're only using dimes. Nickels and pennies are gone. We're done with them. And then as far as pretty much, I mean, look, we saw what's going on with lumber. We saw what's going on with wheat. Look, well, we can look at what the signs are and see what they're telling us, or we can ignore them. The choice is ours. But I know what I'm doing. I'm sticking to the technicals. All right, so let me jump back in the chat here one more time. Angel laughing again at something I said. I'm sure it was hilarious. Can you add 4-year cycle on Bitcoin for the bottom? Yeah. Can you do a follow-up on UTZ? Yeah. So are you saying we should read Snowball? Totally sold it at the end there. Oh yeah, dude. I mean, if honestly, if you love reading 600-page books that are useful but also like mediocre at best, I 100% would recommend Snowball. I mean, it's amazingly like unnecessarily long, but if you want to know, like, you know, when Warren Buffett puts on his shoes in the morning when he was 9 years old, which shoe he put on first, and like what technique he uses to tie his shoelaces, like loop, swoop, and pull, the bunny ears, like if you want to find out all that, and I'm not going to spoil it, I'm not going to tell you guys which shoe he puts on first and what method he uses, but if you do want to look, if you want to find that stuff out, it's there. It is there for you. And look, I mean, aside from the like ridiculously large amount of like spelling and grammar errors and like the unnecessarily like ridiculous details and like blatant like dated racism, I would definitely recommend it. And now, honestly though, it's not like I'm saying Warren Buffett is like racist or anything, but sometimes I think people forget like that, like 50 years ago, how much crazier the world was, and people are like, oh, it's racist and America, and they're keeping down the minorities and it's terrible. Okay, read that book and then tell me if it's better or worse now than it was back then. And I'll give you a spoiler. It's better now. And keep in mind also, this is coming from someone that is not of the whiteness. So, you know, I'm not like being racist again. I'm saying bad stuff happened in the past and we're not perfect now, but it's better. But yeah, I mean, it is a good book, but it's so ridiculous. Like if you're going to spend the amount of time and log that many pages, I can give you 600 other pages that are better than that. But it is cool. I mean, if you like Warren Buffett, you want to read about him, it is. It's nice to know his story and everything. It is a good book. Sort of. And then Jayhoff said, could you also look at IMAX if you have time? Yeah, okay. So let's go to our Bitcoin and we'll slap it a base, my boy. Slap it a base. Oh my gosh, look at this beautiful Bitcoin chart. Oh man. Whew. This is just great. Absolutely nothing on it. No, you know what? That's not nothing. That's nothing. Yeah. It's so pretty. It's so pretty. Man, why do I go to use TradingView and just immediately never know where anything is at? All right, so if we go from the peak right here, and then we take it out to our next peak right there, we'll turn these ones red. So we're basically just using this monthly candle and this monthly candle. I'll switch to a shorter time frame and, you know, tighten them up just a little bit. And it basically within, you know, a couple, I mean, essentially it was 1 month off, 2 months off from the high right here, going from the previous highs. So we see it's pretty damn accurate, like to a T. And then if we just want to use the bottom right here, again, and, you know, this is just the 4-year cycles, which is, I mean, you don't have to respect it. You can just say, like, 4-year cycles are dead and they're just garbage and they obviously don't work. But, I mean, it is like literally written into the code that we have like the halving every like 4 years. So it's probably worth paying attention to. But that roughly gives us, those areas. And then we'll go to a shorter time frame in a second. But what I want to do is, I've had people ask me quite a few times about the rainbow chart. Oh my gosh, why can I never find anything on TradingView? It's not like I haven't done all of these things a gazillion times live on stream. Oh, there it is. Not like I've used this tool a billion times and always use it the wrong way too. So I don't know what it is. There's something about that tool that it just always is the opposite of what I think it should do. Or maybe I'm just too stubborn. I'm like, eventually TradingView will get it right and they'll put it the correct way, which is the way I want it to be. But I am one of those weird ass people that, like, back when I used to play video games, I would play with my controller inverted. I don't know. I think I'm the only person on earth that uses inverted setting on their controller. So maybe that's why. It's like, I think part of my brain inverted and it just never went back to normal. That's got to be it. So, okay, so what I did here was I just took the curvy line tool. Yeah, curvy line tool, I think, is the official name. They're calling it just the curve, I guess. But curvy line tool is like the technical definition of it. Not according to the Biden administration, but to everybody else it is. Curvy line tool. So there's our green support right there. Okay, so why did I draw it the way I drew it? Well, obviously we have tons of confluence right here. We have tons of confluence right here. We have a low right here. So both the bear market, like basically like bottoms before we start moving up, are at that. And then here we have the Rona dump where we dropped through it and it could have capitulated and went straight to zero. And it tried very hard, but actually got bought back up. And then now where we at right now, we're very close to that. So maybe it already bottomed. Maybe it's just really, really close to bottoming, but something along those lines. And then again, if we just do the same thing, I'm just going to stick it out here somewhere in the middle of the nowhere. And then we'll just kind of tighten this up like a twiga. Twine it like a twiga. And here's my problem is with this, you got to get a little crafty, okay? It's not easy. And you can kind of fudge it and make it do what you want it to do. But if you do it just right, it will do what it should do. Nope. Getting closer. That looks pretty good. All right. So, okay. And like a normal, like when you see that rainbow, Bitcoin rainbow chart or whatever, normally what you'll see is, oh my gosh, are you serious right now? Normally what you'll see is, and I'm going to just switch a color on this real quick, and then I'm going to draw it like how I see it drawn all the time. They're like, oh yeah, well, according to the Bitcoin chart, like it should go like this. This is what it should look like. Like according to like everybody else that like draws the Bitcoin rainbow chart, they're like, oh, okay. So in 1 week's time, we should be at 1,085,000 according to the Bitcoin rainbow chart. But I mean, obviously it was drawn by, bulltards. So instead we'll use like actual correct way of like drawing stuff. And again, this is very subjective, but essentially this is what happened. Over time, the moves are ridiculous in the beginning. And then over time, they kind of compress as an asset becomes more stable. As time goes by, the moves are bigger in dollars, but smaller in percentages. So like from the move right here, from our low to that one, the percentage is like 43,000, give or take. Okay. And then from here, it's roughly 6,850. And then from the next one, it's roughly 1,894. So, logically, I'm not saying like there's a specific number it has to be, but it's not going to be 1,800, and it's probably not going to be 100 gazillion %% move or whatever people are trying to say it will do. But let's just say the bottom is in. That's it. And then over, the next few years, we're going to go up here at some point in time to a new all-time high and hit this resistance. All right, hang on. I mean, are you kidding me right now, TradingView? If that was our peak, that was our peak, and our peak was somewhere around here. Actually, let me tighten this up on a shorter time frame really quick so we can get like a little bit more accurate. That looks like the oil chart now. All right, that's a little better. Okay, so let's go back here real quick, and we're just going to tighten them up. We'll tighten them up like a twigger. Because what happens here, you see how off this is? Because we drew it on the monthly. You know, we're nowhere near the peak right here because it just puts it at the beginning of the month. So we're just going to move that over a little bit to our peak-ish area right there. On the daily. All right, and then let's go over to our low right here. And again, same thing. We're just going to tighten it up. Make it tight like a tiger. Yeah, nice. All right. And then we'll just keep on keeping on. All right. And then we're just going to move this one to the peak. That's our 2017 high. There it is. Ooh, look at this guy. Ooh, nailed it. See what you're doing. Move that over a couple dollars, couple dollar bills, yo. There we go. All right, so that should be a little more accurate now. So we can go back to normal. You know, and that's not going to like change it by like a ridiculous amount, but it'll give us a slightly more accurate picture. Obviously, you know, we kind of front ran that high just like by a little bit. Peaked beforehand, obviously. But now we're just going to switch back to the monthly. And then we can talk about potentially what this is telling us. So if we're potentially looking at now, you know, the low being somewhere around, according to this, roughly around, and by around, I mean the exact day that will bottom with 100% accuracy, 25% of the time, will be November 1st, 2022. So we're close. Based on 2 data points. And where are we going to bottom at exactly to the penny? 18,279. But we do know that we could get a situation like this where we wick out. We do know we could break down from this level. We do know a lot of stuff could happen right here. But theoretically, you know, that's what the 4-year time cycle is telling us. And then when's our next peak going to be? And how rich are we going to be? I don't want to mess with this whole trajectory of this line right now and go back and have to redo all this. So I'm just going to we're just going to give it like a little crutch line. We're just going to give it a little buddy, a little extension. Hey, buddy. Something like this. So that's, you know, just extending out into the future just slightly. We don't have to worry about the bottom. So this tells us roughly, literally to the day and to the penny, you should expect with 100% certainty, for entertainment purposes only, obviously, that February 1st of 2026, we will see the next peak in Bitcoin's price action, give or take a bunch of days and 50%. And it should be 1 million. No, that's not it. $137,830.36 with 100% certainty. So it's not bad. And then what would that amount? And obviously I'm joking. We can't predict exactly where it's going to go or when it's going to go there. But let's just say, for instance, that we just got lucky and it was exactly right. That would be a 686% move, which actually isn't that bad. And to tell you the truth, like diminishing returns wise, this was what, 2,300%. So, I mean, it's not crazy to think it goes to 600%. Each one seems to like kind of cut the other one by a multiple, the previous one. So, but anyway, I mean, that's not bad. It's okay. 600% move. I mean, I'd get out of bed for it, but all right. So that is the Bitcoin time cycle stuff. Again, this is very, very speculative, but also, I mean, it works pretty damn good. So, all right. So just drop that like it's hot. And I know there's a couple other ones here. What was it? UTS was one of them. And hang on one sec. Oh, I hate that. I don't know why it bothers me so much when my chair squeaks, but it does. Yeah, I mean, the rainbow is garbage. That's why I don't use it. It's garbage. It doesn't even make sense. I mean, I get what you're saying, Angel, but it literally makes no sense, that the rainbow. Like, I get what they're going for and everything, but it's not going to happen. What was the other one? IMAX? Oh, yeah, for sure, brother. Of course. And then IMAX as well. Hang on one sec. Load that one up. And then we're going to call it a wrap right there because we're right about the, 220. God, I got to go on all these tangents all the time. I mean, I entertain myself, though, so regardless, you guys don't even have to tune in. Yeah, IMAX. All right. Okie dokie. Okie dokie. My bad. I'm about to bring them over here. About to let y'all in. But because I was like playing around with that chart, it like drew them all messed up and like switched it out of like auto and all that good stuff. So, okay, cool. All right, so let's go big screen. All right, so UTZ. All right, so okay, did I never mind? All right, so we entered the position on the confirmation above the 200 exponential and simple back test. Obviously, that gave us a 23.84% upside target to our key fib levels with 7.5% stop loss for a 3.3 to 1 risk reward ratio. We obviously moved up there. We gapped up above the target, take profits obviously, and then it melts down from there. Back test our previous fib. So when we kind of zoom out here on the big screen, we basically have from our high to low, and then we have our low to high is in green, and our high to low is in yellow. So we have a macro fib and then an internal retracement. And we see the 0.5 and the 382 lined up with that target, which obviously is why we picked it. And then we have also another potential trade setup in play that would put us at, roughly the 618 or even the 236, depending, somewhere around there. That would give us 47% upside, 6.5 risk reward ratio, 7.818% stop loss. And then we have another target, which is the 1.618, which is a gazillion percent to the upside, give or take a couple zeros. But in all reality, when we look at this on the daily, what's happening? Well, we were in a bear trend for literally years, and we melted down basically from when we confirmed the bear trend, or, arguably we didn't confirm the bear trend till technically right here on the pushback up. But once you put in a new lower low right here, I mean, it was pretty clear what was going on. But roughly, we went down, what? Not from the high, but from when we went down there, 46%. And it was 321 days. So it was about a year in that bear market. And now here we confirmed into a bull market. And we know what happens when we confirm into a bull market. We know it because it happens every time. We get above the 200 exponential and simple. We flip them blue. Everybody gets ridiculously bullish. We move up. And then eventually what do? We back test. So the truth is, there's a very high possibility that when this comes back down here, and that's why we take profits, obviously. When it comes back down here, depending on how bullish this is, maybe we find support here and then we keep rocking into upside. Maybe we come all the way back down to 200 exponential. Maybe we come back down to the 200 simple. Maybe we come back down to that fib right there. Regardless, somewhere between $15 and $16 roughly, we likely can reload on this and take the exact same trade setup again. Only this time, instead of coming to the 0.5, we probably go to the 618 or slightly higher. So right now, obviously we hit our target. Now it's time to just cool back off for a bit. We don't know how much it's going to cool back off. But again, when we look at this weekly, You know, we have flipped the slope blue right here. We're in the bullish control zone. We have crossed the 8 and 21 to the upside. Very, very bullish. Very bullish. But, you know, this is a pretty heavy rejection candle right here. And we're already working on another rejection candle on the weekly. So in the next couple of days, what's going to happen? Well, if this closes as a rejection candle, I fully expect us to come back down to like 1550. And again, that's why we have to take profits. We have to take profits. You know, I don't care what percentage you do. I don't care. I mean, obviously, I want you all to do well. But, I mean, you can do whatever you want. You don't ever have to take profits. You can just hodl everything. But locking in gains is so important. Because how stupid you can feel if we just had 23% move to the upside, you take 0 profits, and then we come all the way back down. I mean, it's not a bad thing because you just enter the trade again or just double down or whatever you want to do. But that's 23% that you could have locked in. So realistically, let's say you take a $100 position and then it goes up 23%. So you have $100 in the stock and then it goes to $123. So you don't have to take out your whole initial position. But I mean, why not take part of it? Why not take 50 back? Why not take 23 out? I mean, I'd like to take out the full 100 and then just play with the market's money. In this case, with a 23% move going into like a bull, you know, what looks like a long-term bull trend, you know, I would probably take at least 25% of my profits on this initial trade setup. At least 25%. You know, you can break it down. If you have 3 trade setups, you can take 33, 33, 33. You could take 50 on the initial trade setup and then 25, 25. I mean, you can do whatever you want. But the absolute best case scenario is you get into a trade at a good point, it moves in your favor, and then you play with the market's money. That's the goal. And there's not really a lot to see here on the monthly. You know, we want to hold above this level. Again, that's a pretty bearish monthly candle. Basically a shooting star topping candle. And the same way, I mean, and just for, you know, this one's sort of an indecision, kind of like toppy candle. These are like clear bottoming candles, especially 2 in a row like that. That's beautiful. This is already looking pretty clearly like a topping candle. Now on the monthly, we're in the bearish control zone. We're very close to getting the bull cross. And we're showing our first 2 green histograms since all of our red histograms. So it still looks good, but realistically, I mean, it's probably going to 1650 or somewhere around there, back testing the breakout. And then if that level holds, it's probably going much, much higher. Again, to those clear levels that we've already identified. But yeah, I mean, it's still very bullish, but again, short term, I mean, we got to lock in these gains. Got to lock them in before, you know, otherwise you just end up kicking yourself. And I mean, with the pot stocks, like over the last couple of years, perfect example. We have locked in so much gains off pot stocks. If we would have never locked in any of our gains, we would be so underwater as hell right now because all they did was just keep going down. And instead, we lock in like 25%, 50%, 50%, 70%, 20, you know, just one after another. All right, so on to iMaxipad. Now, I'm not familiar with them. I mean, I'm not really a pad guy, you know what I mean? I prefer tampons, but, you know, it is what it is. Oh, wait, this might be movie theaters, actually, not feminine products, now that I think of it. Yeah, I think that is actually right. So, looking at this chart, God, I'm so retarded. Looking at this chart, obviously we peaked out pretty hard in 99. And then after that, we had a slight pullback till about 2001. Nothing crazy. Yeah, I mean, nothing. It's not bad. I mean, I could stomach that pretty easily. 98.39%. Does Michael Saylor own this or something? That's crazy. Must be one of his stocks. From then, it just went absolutely parabolic. So looking at the long-term chart here, just because of how disgusting that move was right there, how just disrespectful that was to anybody that just hodled. They're like, how's your IMAX stock doing? Are you still up? Like really high, man? Are you still crushing it? And you're like, gave back some of my gains. Oh, no, really? How much did you give back? Well, like all of them. And then, you know, it's now worth almost 0. So maybe lock in gains. If there was ever a chart that shows you why it's important to lock in your gains, you're like, one day I was up 611%. And a couple months later, I was down 98%. But we're basically just trading inside this range. You know, we essentially have slightly higher highs each time here, but kind of like a triple top. Such a weird way of doing it. Can't really do much there. We have some clear bearish divergence between these 2 points because of this high and then this slightly higher high. And then obviously it melted down after that, so that was pretty reliable. We have a clear ascending support line. So overall, we have essentially a flat resistance and a upward sloping support, which would reason two things. One, it's a bullish pattern, so we likely break out to the upside with a higher probability than not. Maybe like 66-33. And two, until we break out, we trade the range. So we're very close to the bottom of the range. So let's just assume, just super, super basic, as easy as it gets. Tomorrow we plan on entering a position. What would our likelihood be, and what would the potential, gains versus potential stop loss be? Well, if we break down out of the channel or out of the pattern, it's obviously not good. So that would be a roughly 7% stop loss. And if we break out of the top, obviously, that's great. But realistically, we likely just come up there top and then trade the range. So 160% upside, 27% downside. Risk reward ratio is 5.87 to 1. We are currently underneath the 200 exponential and simple. 200 exponential is red and getting ready to cross below the 200 simple. So sometimes we come up here and put in a new all-time high after the 200 simple crosses. A lot of times it's showing basically exhaustion. What I would be looking at now, and again, I wouldn't want to just enter right now and just be like, I'm buying today. I would wait for a good opportunity on a shorter time frame, which we'll look at in a second. For entertainment purposes only, obviously. So if you have this descending resistance here, we see pretty clearly, depending on how we go, I don't really want to use the wicks. Let's say on the monthly, we use the bodies. One here, one right afterwards, another one here, sideways kind of capitulation, another resistance here, again. So really what we're looking for is, now we don't want to use this as our trade setup right here with this stop loss, obviously. But let's just say, for instance, we're going to wait and just take more conservative approach. And we're going to say, okay, if it breaks above the 200 exponential and simple and it breaks above this resistance and closes, basically what we want to see is, let's just say hypothetically, we move up here, we close at $20. And then the next candle, the next monthly candle opens at $20, obviously, because we close there. And then that one closes at $23. Then we would look to enter into a continuation trade to the upside to play the breakout to the top of the range. And our stop loss would essentially be, closing back below the 200 exponential and simple, or using the previous swings right here, which would give us 21% downside and then obviously 114% upside, and it would be like 5.39 to 1 for scored ratio. So we have a couple different ways we could play this. Now the ideal way to play it is to just be a cheap bastard, okay? In a good way, a good kind of cheap bastard. And say, well, look, I'm picky. I'm stubborn. Okay. I like to get my way. So what I want to see is, I want to see this come all the way back down here. And then I want to see some divergence, some bullish divergence bottoming signals. And then I'm going to take an entry at the absolute bottom of the pattern. And then that way I can squeeze every last drop out of this at 252% upside, 15% stop loss, and a 17 to 1 risk reward ratio. Now, do we get that? Do we get that lucky? Does the market get down on its knees and crawl over to us and beg us to take this bag of money? Probably. It probably does, honestly. But there's always a possibility that you miss it too. So maybe you take, one entry like this and one with the confirmed breakout. There's a lot of options. Let's go down to a shorter time frame and see if anything kind of jumps out at us. I do want to add in this little horizontal right here. That's a key support. If we lose that level, that's huge, and it means we're about to get our nut. It means daddy's getting his nut. We're getting that $12 entry, okay? Doesn't have to happen, though. But, it seems likely if we keep knocking our head or knocking our bottom on this support, eventually we break through it. And we are below the 200 exponential and simple. So it's not crazy to think we basically break down below it, back test it, it fails, back test it again, and then eventually we just plop out the bottom, and then that's where we get our buy. Let's look at our shorter time frames now. So on the weekly, we're starting to build a little momentum here. Yeah, I mean, on the weekly, looks okay. I mean, we're still in a weekly bear trend, clearly below the 200 exponential and simple. So again, that's going to line up perfectly with basically we need to get above $18, $19. So that's like the confirmed breakout trade. So yeah, I would play one of these two setups, whichever one presents itself, which is always nice. It's nice to have, a bullish entry setup and a bearish entry setup. On the daily, we are, again, bear market below the 200 exponential and simple, series of lower highs. Now, on the daily, we don't have a series of lower lows. So there's a small argument to be made that this is more of a neutral pattern and less of a bearish pattern. But when you're like kind of neutral or whatever, what you want to look at is the degree of slope from the top to the bottom. And again, just because we're on the daily, I'm going to just draw these in here slightly different. I'll leave the other ones, but just so we have something along the lines of like this right here. Seems like, yeah. Oh, yeah. Snap to a Slim Jim. Yeah. All right, so something like that. So it's a little more neutral, but again, slight bearish. But essentially, if we break down out of this, we would expect to come back down to the bottom of range and we get our entry. If we break out of this, again, we're basically looking to trade the breakout trade. But I would watch both of these levels for potential. But yeah, I mean, I think that's the way to do it. We got two nice little trade setups. Again, very bearish still, below the 200 exponential and simple. Overall bearish pattern. So the key areas to watch are obviously a breakdown below 1569, and then we're looking to enter around $12, and then a breakout above, depending on where we get there. If we break out literally, tomorrow, we need a break above $20, a close, an open, and then a close again. If we take, a few months to get there and it's March of 2023, then, 1857. But right now, still very bearish. On all time frames, it's bearish, really. But definitely some potential there. I mean, even though it's bearish, doesn't mean there's not a great potential trade setup. Would you hodl IMAX, though, knowing that there's always potential you lose 98%? I wonder what happened. That seems really excessive. All right. But yeah, I think we'll go ahead and wrap it up there. All right. So appreciate everybody tuning in today. Make sure to like and subscribe. Obviously, you guys are all group members, so I'm just going through the motions. Arturo, good to see you, brother. Thanks, bro. Great work lately. Hey, appreciate it, man. That Magic 8 Ball, I hope it doesn't run out of power because we've been killing it. Been killing it. If there's only something else as reliable as the Magic 8 Ball, the tarot cards, and the, lunar cycles. I don't know. I haven't found it yet, but if only. All right, so we'll go ahead and wrap it up there. Appreciate everybody for tuning in. Thank you to the group members, all for your support. Obviously, you can check out the stream every single Wednesday and Sunday from 8 p.m. till whatever. And then, obviously, on Fridays, our weekly market wrap-up from 11 a.m. till usually about 1. And some static videos in between, sometimes excerpts or clips if you don't have time to watch full streams. I can get the good stuff, the juicy stuff, the rants, the raves, the charts, all that good stuff on the static videos. But I appreciate everybody tuning in today. Go ahead and wrap it up there. It is 10:39 p.m. Eastern Standard Time on Wednesday, August 17th, 2022. I am, of course, Crypto Trend Trader. And as always, guys, I'd like to remind you, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. So please do your own research. And, of course, trade responsibly. Crypto Trend Trader. And I'm out of here. Peace. Take it easy, J Hoff. Good to see you, man. Appreciate you guys, all the likes, support, the love. And everybody have a great week. Just be careful here because we're starting to see some signs of topping. It's not going to just happen all at once. There's definitely going to be some volatility starting to pick up. Watch that VIX and look for, the potential moves there. And to tell you the truth, I'm not going to pull it up now. We're already wrapping up, but we will definitely discuss that VIX. And there's a massive potential move that we're looking at as well. So it could be a lucrative opportunity either to, trade one of the derivatives or, potentially short options, whatever, these markets. So that's it. Everybody have a wonderful night. Crypto Trend Trader. And I'm out of here. Peace.